I would like to extend our warm welcome to all faculty members, alumni, students, and our audience on YouTube. Investrix has been a legacy of KJ Somaiya Institute of Management for over 3 decades, where we strive to engage in meaningful discussions and gain valuable takeaways from industry stalwarts. We request Dr. Raghu Kumari Ma'am, the chairperson of Center of Excellence in Capital Markets, to deliver the inaugural address to introduce Investrix 2025. Please welcome, ma'am.
Good morning, distinguished guests, esteemed speakers, faculty members, and dear students. On behalf of Center of Excellence in Capital Markets, it's my honor and privilege to welcome you all to the Investrix 2025 event at the KJ Somaiya Institute of Management. We are delighted to have you all here, and I'm truly excited about the enriching discussions and insights that awaits us today. Investrix was founded in 1990 with a single vision to bring together industry leaders, financial market experts, and academic minds to discuss contemporary issues in the ever-evolving world of capital markets. Over the years, this event has established itself as one of the most sought-after platforms for thought leadership and knowledge sharing. We continue to strive to maintain its legacy by delivering relevant, timely, and impactful dialogues. This year's theme, Navigating the Investment Landscape, Time for Cautious Optimism or Embrace of Animal Spirits, could not be more relevant today given the current global climate. As we stand at a crossroads of uncertainty and opportunity, we are faced with critical decisions about how to approach the future of investments. With emerging economies increasingly positioning themselves as attractive destinations for capital, the decision between cautious optimism and the bold embrace of animal spirits becomes even more significant. The theme invites us to explore the delicate balance between careful strategic investment and the spirit of risk taking that drives innovation and growth. It challenges us to reflect on whether we should approach the global investment landscape with optimism or with cautioned optimism, or should we try for risk taking? So, this is the most pressing question today in front of us. This event will give us a unique opportunity to hear from some of the brightest minds in the financial sector as we engage with speakers, panelists, and thought leaders from the investment world. We will gain invaluable perspectives on global investment trends and the Indian market's position in the global ecosystem. This event will equip us with a deeper understanding of what is at stake and where the greatest opportunities lie, from the emerging economies to the global financial shifts. We strongly believe that events like Investrix play a crucial role in bridging the gap between academia and industry. They allow us to bring more profound understanding of complexities of financial markets and prepare us to lead in this dynamic and fast-changing world. This event is possible because of our student team, which is Finstreet, the finance committee at KJ Somaiya. They are engaged in multiple facets of investments, right from preparing newsletters, research reports, and engaging in various case study competitions. Their journey is going to come to you on the way through a colorful video. Once again, a warm welcome to all our distinguished guests, speakers, and participants. I hope this event serves as a springboard for fresh ideas, meaningful debates, and valuable connections that will guide us in navigating the exciting yet challenging investment landscape ahead. Thank you, and I wish you all a very productive and insightful day ahead.
Thank you so much, ma'am, for taking us through Investrix 2025. Investrix has been made possible because of the committed team at Finstreet, and the Finstreet has been actively organizing a multitude of informative activities and programs aimed at enriching the experiences of students at this institute. Now, let us take a look back at the journey at events that have unfolded at Finstreet.
And welcome as we embark on a journey through one of the leading committees at KJ Somaiya Institute of Management, the Finance Committee, also known as Finstreet. The foundational concept behind this committee is to close the gap between industry practices and academy teachings by organizing impactful knowledge sharing sessions and events. Driven by a network of enthusiastic members and esteemed industry professionals, the committee's existence date back to college's founding and continues to thrive under the leadership of Dr. Rashmi Soni. Each year, the committee broadens its reach and influence through new initiatives, including various magazines, journals, and publications. One of our flagship initiatives is Finley, a monthly magazine that provides in depth sector and company analysis along with a featured profile. It currently enjoys one of the highest readerships among monthly publication in B schools across India, and as of January 2025, it's on its 139th issue. We also publish Finstreet Journal, a weekly newsletter that keeps readers informed about recent financial developments, covering critical topics like macroeconomic indicators, corporate earnings, and market trends. Currently, it's in its 216th edition as of January 2025. Additionally, Finstreet Stock Overview, a bi weekly publication, offers a clear and comprehensive examination of individual stocks listed on the stock exchange to aid investment decisions, currently at its 45th volume as of January 2025. To energize the finance community, we organize dynamic events like Lock Stock Trade, an inter-college virtual trading competition featuring live stock quotes. Let's turn to Investrix, where each year we delve into timely topics such as investment opportunities in emerging markets and the delicate balance investors must strike between growth potential and risk. Renowned speakers including Jim Rogers, co-founder of Quantum Fund, Swaroop Mohanty, CEO of Mirai Asset Investment Management, Prashant Jain, founder and CIO of 3P Investment Managers, Vishal Kapoor, CEO of Bandhan AMC Limited, and Neil Burade, deputy editor of Mint, brings valuable insights to our discussions. Our corporate panels unite global financial experts on a single platform for thought provoking conversations. As we prepare for Investrix 2025, the spotlight shifts to the broader global investment landscape, exploring strategies for navigating the complexities of today's volatile markets. In Sim's Bloomberg Finance Lab, students gain hands on experience with live market data, bridging theory and real world finance. Specialized programs and Bloomberg certifications give them a competitive edge, ensuring they're industry ready from day one. Furthermore, through live projects like Lakhani, students get first-hand exposure to industry analysis and discounted cash flow valuation, strengthening their financial acumen. Additionally, our post-budget analysis report provides a comprehensive breakdown of the union budget, highlighting key policy changes, economic implications, and sectoral impacts to help students and professionals stay informed about fiscal strategies shaping the market. 2024, Indian equities saw significant growth despite global economic challenges, with the Nifty 50 reaching impressive heights as foreign portfolio investors continue to invest in India. However, the landscape is complex. Rising global inflation, supply chain interruptions, geopolitical conflicts in Europe and the Middle East, and unpredictable climate conditions have contributed to a more cautious investor sentiment. The ongoing US China trade tensions, coupled with shifting oil supply dynamics due to Middle Eastern unrest, further complicate investment strategies. Central banks worldwide are grappling with interest rate decisions, attempting to curb inflation while maintaining economic growth. These factors have led some to ponder whether the market is peaking or if it represents a chance to undertake greater risk in pursuit of higher rewards. During Investrix 2025, we will explore these questions and much more. We will examine how emerging markets, particularly India, are positioning themselves amid this uncertainty and how investors can strike the right balance between risk and reward in a fluid environment. We will engage with financial leaders to discuss strategies for walking the line between prudence and exuberance, and how global events shape investment choices. As we proceed, I invite all of you to engage, ask questions, and make connections. This conference serves as a platform for sharing insights, challenging concepts, and preparing ourselves to make informed and proactive decisions in the volatile investment landscape. Let's embark on this journey together. Welcome to Investrix 2025.
So let us now begin with our session for today with a fireside chat. We are honored today to welcome Mr. Sameer Lodha, founder and managing director of Quantart, as a distinguished speaker at Investrix 2025. Sir will be joining us via Zoom today. Mr. Sameer Lodha is a graduate from IIM Calcutta and has been working in global markets for the last 25 years, specializing in foreign exchange, interest rates, commodities, hedging, and risk management, with a special focus on USD INR. He worked for the first 12 years in senior positions at JPMC, at ICICI Bank, and HSBC. Since 2012, he has been working with corporate CFOs, treasurers, and directors, helping them with hedging and risk management of foreign currency, interest rates, and commodities. He has also trained numerous bank and corporate executives in foreign exchange, interest rates, commodities, derivatives, options, and swap pricing. We welcome you, sir. To moderate this discussion, we have Mr. Akshay Chinchalkar. Mr. Akshay Chinchalkar heads research, content, corpcom, and business intelligence at Axis Securities, leading efforts to set customer-focused benchmarks in retail broking. With over 18 years of experience in derivatives trading, technical, quantitative research, and global roles, he previously served as Bloomberg's APAC equity derivative strategist, expanding global derivatives coverage and supporting cross-asset themes. His Bloomberg tenure included multiple roles such as market specialist, workforce specialist, and many more. An MSc in Accounting and Finance from the London School of Economics, a CMT charter holder, and a former global member of the CMT Association, he specializes in technical analysis, quantitative research, strategy backtesting, with a keen interest in Python and algorithmic trading. We welcome you, sir. So, exchange rate shift and monetary policies shape risk and reward for investors. But one of the most crucial yet sometimes overlooked factors in investing is currency. As emerging markets position themselves as top investment destinations, investors face a key question: should they play it safe or take bold risks? With that, let's begin our fireside chat with Mr. Sameer Lodha, a leading expert in currency, and Mr. Akshay Chinchalkar. Over to you.
Thank you, team. It's a pleasure to be here on a Saturday morning. Sameer, you're able to hear me?
Hi. Yes.
Okay.
Hi,
Good.
everyone.
Hi. Sameer, I have to start by saying that you look a lot younger than you did in 2024, so that's good. And I think you'll be more than comfortable answering some very pressing questions I have for you for everything that's happening in the currency markets with a special focus on the rupee, of course, because it's been making headlines almost every day, right? So I think we're ready to dive in. So my first question, Sameer, for you is, like I said, right? I mean, the rupee's making headlines every day, new lows almost every day. I was checking some of the data on the terminal, and yesterday I realized, it was the worst performer in the Asia currency basket on a year-to-date basis. Now, for all of our students here, can you briefly walk us through what challenges this can bring from a macroeconomic standpoint, given where we are? Let's get your thoughts on that.
Yes. Hi, Akshay, and everyone. First of all, let me thank you, everyone, for having me here. And let's start with the question. Yes, dollar rupee is making headlines almost every day nowadays. The challenge is this move, which has happened from 84 to 87 half. It brings, in my opinion, two big challenges, and one positives also is related to the same. So let me first start with the challenges. One is the corporate India, who have import and export. So the corporates do not like too much of volatility, because when you are doing business, you like certainty. When you are importing or you are exporting, and then you are doing your costing and pricing, the corporates like stability. And suddenly this volatility has hit. So this kind of 2 rupees or 3 rupees or 4% move has not been new to dollar rupee. But what has been shocking this time, that in 2024, rupee was one of the least volatile currency in the world. It was almost looking like it's a pegged currency, like a Hong Kong dollar or dirham. But then suddenly this volatility has taken corporate India back, and that has created a bit of panic amongst importers as well as in exporters, then what to do now. So that is one challenge area. Second one is for the global investors. When global investors do invest and they see that the currency is sliding, generally they are not too bothered about 2 or 3% depreciation a year, because when you are investing in equity, you are looking for 15, 20, 30% kind of return, and you are not that worried about 2, 3%. But when you see that the moves are sharp and the going forward paths are not clear, then there is a bit of panic around it. So these are the two issues. However, on the positive side, this was to happen because rupee has to depreciate along with the peers. Otherwise, the export competitiveness go away. So India exports quite a bit, like textile when a country is exporting in the textile segment. And let me tell you, textile is one of the largest employer at the lower segment. It employs lots and lots of people. So when you are exporting textiles, you are competing with other countries like Vietnam, China, etc. So if your currency is overvalued, then your pricing will suffer. So this kind of maintains your export competitiveness and helps exporters. I mean, ideally the exporters should not be that unhappy, apart from the difficulty of managing the volatility. So
Understood. Yesterday we had the RBI cut rates by 25 basis points. It's the first cut in, I think, nearly 5 years. Still, when I looked at, what people were saying about policy and, the way forward, I could see that there was some disappointment in a certain section, which was probably, wanting to see like a larger cut. Now, do you think it would have been prudent for the RBI to therefore please that section by maybe giving a 50 basis points cut? Or do you think what they did, given the current weight of the evidence, made a lot of sense?
So, Akshay, when I meet so many companies, I do also ask them a question. How do you see your business doing compared to last time I met you? So that's one of the information gathering about, because these guys are on the ground and they are doing business. So there is a bit of slowdown, little for sure, that is clear, and that requires some boost from Reserve Bank of India. So that way, quarter basis point rate cut is good, and possibly another quarter should come. But RBI is constrained by the fact that US is nowhere close to cutting rates as of now. So if US is not cutting rates, it will be very difficult for RBI to go for a rate cut path, because that will further pressurize the currency. So if RBI cuts rate by 1%, for example, and US is not cutting, then the rate differential comes down further, and that will make rupee even more unattractive. So there will be more stress on the rupee, and RBI will find it a bit difficult to manage that. That is, I think, one of the consideration. And of course, inflation continues to be there globally in so many countries. So because of that, I think RBI will possibly do quarter more, and maybe in future they will be slowly taking a path of rate cuts.
Historically, what I've seen, Sameer, is the RBI tends to follow the Fed's policy path. So you don't think that is going to change anytime soon?
I don't think so. As of now, all said and done, US continues to be the financial leader of the world. I mean, we like it or not, that is a fact.
I remember in September when the Fed actually slashed rates by 50 basis points. The market was pricing around 6 to 7 cuts in CY 2025. Now I think we are barely thinking we'll get two for the year. Would you subscribe to that view too?
No, that time, actually, I remember very clearly, we have been saying that market is going a little overboard because inflation is not going to come down that fast. So now at this juncture, I would say both are possible because if tariffs are there and there is a trade rift, a slowdown is also likely to come. If a slowdown comes in USA, then again rate cut is on the table,
Correct.
right? So that is a good possibility. I am not saying that Trump will say that cut rates and then Fed will be cutting rate. That will not happen. But if there is a softness in uh, economic activities in USA, that will bring back the rate cut in question. So currently the market is expecting only quarter to half basis point rate cut, US curve, which I think is, I mean, honestly, at this stage, both rate cuts as well as no rate cuts are on the table because the uncertainties are very high.
Yeah.
The policy uncertainties in USA are very high. However, I would still feel that rate cuts are more likely than rate hikes.
Understood. And therefore, it's a good time for me to talk to you about the dollar. Now, the dollar index has seen, a stunning rally from the end of September. As it became apparent that Donald Trump was going to become POTUS for a second term. Now, do you think the dollar has more steam left on the upside, or do you think it'll become that classic case of buy the rumor, sell the rally, as we've seen umpteen number of times in the past, including 2017 when Trump became POTUS for the first time? So how do you see the dollar, doing from here?
You are absolutely right. In fact, one of the tests which I would like to tell all the student to always do, that if everyone in the market is talking about the same thing, you have to question that. So
Correct.
recently, everyone has been very, very clear, that Trump has come, tariff will be there, dollar will be up. So that then you have to question that whether it's going to happen or not, uh, because it has been already factored in the market to a large extent, and
Hmm.
that's what we are seeing. However, going forward, I honestly feel the path is quite uncertain. So dollar weakness may also come, or it may remain stable. I would say more dollar weakness is likely because uh, rate cut can come back on the table.
Hmm.
One rate cut can come back on the table backed by slowdown. However, before a slowdown or a recessionary stress, there will be panic in the market. So during that sell-off, so first time when you see bad economic data in US, what will be the first reaction? First reaction will be panic, where equity markets will come down, dollar will become stronger.
Yeah.
After that, when Fed chips in and said, no, no, we will cut rates and stabilize market, then you'll see dollar coming down,
Hmm.
right? So we expect dollar to come down, but little later, not immediately. Uh,
Understood. Understood. It's interesting because recently the US Treasury Secretary also said that the administration will take efforts to, keep the 10-year yield down, not so much pressure the Fed to pivot lower more than it already has. What do you make of this? And I think, in a way, you've already answered the question because you said rate cuts from here with the current weight of the evidence are not something that are done and dusted. I mean, it really depends on how the economic situation evolves. So you think there is some chance that the Fed, even though it may delay cuts, we can't entirely shut the door on future rate cuts, just as they were being priced maybe like 6 months ago.
Correct. In fact, it is easier to say that we will be bringing down 10-year rates, but 10-year is not in your control as a policymaker or a government. You can have handle on a short-term interest rates. So you can bring down your short-term interest rate, you can take action. 10-year is more of a reaction of the market. And that also not a knee-jerk reaction. It's a matured reaction of the market of an assessment of the next 10 years. So if your policies are such that it's going to be inflationary, and if your policies are such that the whole world will not be jumping over to buy dollar bonds, then how can you bring down the yield that easily? So the inflation really has to come down, the government borrowing has to come down in USA, and dollar bond should become attractive enough so that people buy bond and the yield comes down. That's
Yeah.
that very much depends on the taking the right steps and no talk or no short-term steps can actually impact 10-year yield. It's a pressure tactic, nothing else apart from that.
Yeah, I've heard something similar. In fact, that's exactly what happened after the Fed cut rates in September. I think the US 10-year yield went down for an additional day. But after that, the US 10-year was up. I think it was a one-way street on the upside, went about 100 basis points higher, despite that the Fed then cut in December as well. So I think clearly the market was also thinking that inflation isn't going to come down in a hurry, right?
Correct, absolutely. So you may cut short-term rates, or you may buy bonds to reduce the yield, but all the long-term prognosis will be market will take an assessment and then keep the long-term rates where it should be. So unless it's disinflationary and government borrowing comes down, difficult to contain the 10-year rates.
Understood. Samir, do you picture a scenario where the dollar starts coming off due to a softening in the US economy that then has ripple effects on the rest of the world? And would that therefore create more pressure on the rupee, given what we've seen? Or do you think the falling dollar will actually act as a tailwind for the rupee?
I think if there is a chaos, first reaction will be dollar strength, because still it is considered as a safe haven currency, etc. And after that, even if dollar weakens, dollar index comes down, euro becomes stronger, uh, JPY becomes stronger, moves towards 145. Those are good possibilities. But rupee coming back to 84 is unlikely. So best case for rupee is kind of remaining stable and not depreciating significantly further. So, so rupee will, I
So,
think, rupee has a habit of being a little sticky. So once it depreciates, it doesn't come down that easily. So once you have reached 87, now that 87 has been crossed, 86 has been crossed, it's a little unlikely that it will go back to 85 plus kind of levels. Uh,
no, you said it's interesting. You said 84 is unlikely. Do you mean unlikely for FY26 or unlikely forever?
if it's not happening in FY26, then I think it's not happening.
Understood. I want to talk a little bit about domestic inflation. I mean, the budget obviously, you know, now leaves more money in the hands of the middle class. Is there, therefore, an inflation risk going forward? And if that happens, will it also impact the rupee? And I want to get your thoughts on that. You mentioned the Bank of Japan, and I was also reading that uh, the BOJ has also acknowledged that inflation in Japan is a real risk now. And therefore, the policy path may be for higher rates for them for sure. But how does that feed into what the RBI is likely to do if spending on consumption goes up, thereby making inflation domestically a little stickier on the upside?
Akshay, I think two things, my thoughts are two things are contributing to this inflation. One is, for the last 10 years, the kind of liquidity all the central banks have infused in the market by taking the rates to zero. During COVID, they did quantitative easing to a massive extent. And Japan, of course, is low rate for multiple decades now. ECB went down. So this too much of money in the system is now causing the inflation. It took a bit of time, but that is one of the reason why the inflation is there. And the second factor is, there's only one country in the world right now which manufactures so much and is facing a deflation, which is China. So if China, which is supplier to the world, is having a deflation, ideally they should be exporting the deflation to every country. But the trade rifts, China has trade rift almost with every country, whether it is India or US or Europe, everywhere. So they are not able to export that much of deflation. Of course, to some extent, it's getting passed on through the commodity prices, because commodity prices have remained subdued during this period. So China actually can pass the deflation to the world, but with tariff and a protectionism, and at least we can clearly see that international trade is kind of getting will be having a bit of rift. Even the tariff issues are sorted out. Every country is planning how they can handle, Trump kind of behavior. I mean, no one wants their dependence on another country, which can certainly go away. So everyone will be planning a little domestic focus. Can I manufacture? And that is going to be inflationary. In addition, the inequality which is there, that also creates kind of inflation which is there in the market. So all said and done, unlikely to see a scenario where inflation is very, very low going forward.
Yeah, fair enough. Samir, you're so closely connected to corporate treasuries of all sizes, and I'm sure you have like daily conversations with them. What is the sense that you're getting from this audience, given everything that's happening? Are people surprised with how much the rupee has fallen and in such quick time? Uh, are you seeing some visible nervousness from people starting to maybe think that we should have actively hedged some of these exposures? What is the overarching sense you're getting?
So Akshay, if you see, unlike 2005, 6 or 2010, most companies were decently hedged of late. I mean, those situations are not there that people were completely unhedged and everything, they are being surprised completely by the move. So they were either fully hedged or partially hedged for sure. So that way, it has not impacted that much to a large section of the companies. Of course, there is a there are some companies who have been caught by surprise, and now they are planning what to do, how to hedge, etc.
Yeah.
So I come across such companies quite a bit. That is one. On the view, as of anyway, let's come back to the corporate nervousness. But the move which has happened now, 90 as well as 90 is also a possibility, right?
Correct.
Because
People have
because
started
it's an
talking about that
RBI.
number.
If Bank of India is not controlling, then it may go to 90, and that kind of situation there will be further panic. So there is a panic. People are hedging through options. The hedging activities by banks have significantly increased of late. We can see that it's a very, very active market, the hedging market, which was quite dormant for during 2024 and 2024. So, uh, yes, people are getting into hedging significantly to manage this risk.
So you believe hedging activity is only going to grow from here?
Yes, in fact, honestly speaking, Akshay, the rupee volatility impacting the currency, it happens only when there is no well-managed hedge program. Because hedging market in India is quite good, the option, the swaps, even option structures, many instruments are allowed. You can do dynamic hedging. So it's a much mature market compared to if you see the other Asian countries like even China, Malaysia. Indian hedging market is quite decently developed. So if companies which engage into hedging, they will not face too much of stress, and they are not facing as of now as well. Of course, the question will always remain what to do. It will be a little difficult evaluation, but you can manage the rupee risk comfortably with hedging.
Understood. My last question, Samir, is based on what you see and hear. What is your range for the rupee between now and the end of the calendar year? I mean, if I dial the clock back, let's say 4 5 months, nobody was, even quoting that number of 90 as a potential target. But now it's truly, going into the mainstream where there's a lot of market chatter about, breaching 90 before the end of the calendar year. Is that just, someone being too pessimistic on the rupee, or do you think there is a realistic chance, given what's happened in the last month or so?
Now, I think the biggest change which has happened in the USD market is in the way Reserve Bank of India has been managing, and now the way they have been managing. So in 2024-23, they have been managing it in a very, very tight manner. There was a gradual depreciation, but it was well contained. The volatility went down so much so that the market was kind of getting killed. From there, the current situation is that the volatility has been significantly allowed. And what has happened is there is a panic. So importers are hedging more, exporters are thinking of holding on, and traders, of course, are long dollar and looking to gain by rupee depreciation. So in such a scenario, Reserve Bank of India, which is the largest player, and I believe they have the sufficient reserve of 630 billion. Even if you take the forward sale out of 550 billion is a more than sufficient, because you have to see the multiple of current account deficit. So our monthly current account deficit is around $9 billion a month. So they have 550 billion, which is good enough to support any kind of crisis. But then right now, while they have the reserve, the resolve is not that visible in the market. So unless RBI makes a statement or takes some action which protects or halts rupee, then it will move towards 90 is what I feel, because the kind of positioning it has created in the market, it will move towards 90. So how
And
strong action Reserve Bank of India takes is very crucial.
and therefore, do you think that will also feed into inflation?
Of
Should it
course,
happen?
it has to happen, because we import so much, around 55 to 60 billion dollar a month is our import. So if dollar rupee is increasing, then to that extent our import inflation is increasing.
Understood, Samir. Those are all the questions that I had. If anyone from the audience has any questions, happy to take them, I'm sure.
We now open the floor for questions.
I have to say, anyone interested in, doing a foreign holiday will certainly have questions about how the world at 90 will look.
Uh, Good morning, sir. So, as you were talking about, companies using options hedging and also banks using hedging. So, can you share some insights on or how business strategies on how companies use hedge to hedge against forex volatility?
Yes. Okay. So, Reserve Bank of India allows importers to hedge using, of course, forward contract is a simple forward contract. Then, for importers, it's a call options. Then out of the money call option. Then structures are there where you do a range forward, collar, or spreads. Uh, and exotic options are also allowed as long as there is no leverage, etc. Now, it is very, very crucial when you use option. Option is like a nuclear technology. If you use it well, it's very good. If you don't use it well, it will backfire. So the knowledge is very, very important. In fact, since it is a student forum, I would like to say that you should go deeper into the practical understanding of the option, the volatility surface, the structures, etc. So some of these common structures which you should find out and learn a lot about it, like call spreads, range forward, seekers, and then there are many stuff. I mean, good enough materials are available. So these options are being used to protect. Many a times it costs less. So when you hedge in India, an importer has to pay forward premium. Why? Because the currency which has a lower interest rate is always at a premium. So dollar is at a premium. Future dollar is higher than the current dollar. So when you are hedging, you are paying premium as an importer. So using an option, you can minimize that premium. That is one. Second, you can also structure it in such a way that if tomorrow for some reason rupee goes back to 86, you benefit from that appreciation back. So that is how it helps. But whenever you do an option and you're trying to reduce cost, there will be some partial risk which will be open. So that you have to have a very clear policy to close it if things go wrong. So it is very important to have that understanding and policy clarity.
Samir, I had a question to that. I mean, do you see that corporates of late and corporates of all sizes in terms of their treasury book are starting to actively get into the world of options? Or is that area still the remit of the large treasuries that you've dealt with?
No, many medium sized companies are getting into options very clearly. The large treasuries also, those who used to be conservative, they are also seeing merit in getting into options. But of course, the safe kind of option, not something which exposes them too much on the risk, or there are certain, checklist which you have to do to ensure that option will not backfire ever for you. So that's what the large companies are doing. They are putting that in their policy. Uh, However, the mid-sized companies, they are getting into options for sure. Yes.
Understood. Any other questions from anyone? Yeah, we've got one there.
Good morning, sir. So my question is related to inflation. Like as you talked about quantitative easing, and in quantitative easing, we know that Japan has been doing quantitative easing from a long time, and post 2008, US also started doing quantitative easing. But my question is that post COVID, they also introduced fiscal stimulus, US especially. So my question is mainly that is inflation a monetary phenomena, or is it due to the fiscal stimulus which USA did in COVID? Because we did not really see inflation post 2008 when they were just doing the monetary aspect of swapping of assets.
Well, that's a very interesting question, because, but to answer it briefly, I would say the money which was infused in the market actually went to a large extent into uh, investment assets rather than just being consumed. But the fiscal phenomena which is there, the government spending which happened, as well as which is going to happen in the future, that goes in the hand of the people who are likely to consume. And it's in a way why governments are doing so much of fiscal, and they have to possibly do more and more fiscal spending, is because the structure, the monetary policy led structures, or the business structure has created lots of inequalities, and I would say technology also. So some people are very rich, and there is a large section who have difficulty. So in a way, every government, if you see directly, indirectly, is trying to ensure some sort of equality through fiscal stimulus. And yes, I mean that is something I would agree with you that the fiscal stimulus is something which contributes more to the inflation than the monetary stimulus alone.
Okay. Yeah, I think that is pretty much it. Samir, thank you so much for those insights. It's always a pleasure to talk to you. And I think you've done a pretty good job of answering the tough questions that I had for you this morning. So well done on a Saturday. And yeah, with that, take it away. Thank you so much, Samir.
Thank you, Akshay. Thank you, everyone. Wish you all the best. Uh, Nice event, and uh, wish you all the best. Thank you so much.
Thank you, Samir. Have a good weekend. Bye.
Thank you so much, sir, for that wonderful session. We got to know a lot of insightful things about INR USD relation, dollar index, and impact of rupee depreciation, interest rates, and policies. And I'm very, very sure that our audience gained numerous insights from you.
Thank you, sir, once again.
Thank you so much. Thank you.
So, this year, we gather under the theme Navigating Investment Landscapes, Time for Cautious Optimism or Embrace of Animal Spirits. Today, our distinguished panel will break down the global economic outlook, market sentiment, and key forces shaping investment decisions in 2025. Whether you are a seasoned investor or a curious observer, this discussion will offer valuable insights into how to navigate the road ahead. I would now request our esteemed panelist, Mr. Saurabh Bhatia, Mr. Kaustubh Sule, Mr. Naveen Kulkarni, Mr. Vetri Subramanyam, and Mr. Akshay Chinchalkar to kindly join us on the dais. Can we have a big round of applause, please? It is an absolute honor and privilege to be graced by guests of such high eminence from the industry for this discussion here today. It is our honor to host our first panelist for today, Mr. Saurabh Bhatia. Mr. Saurabh Bhatia is a highly accomplished finance professional with extensive experience in macro strategy and fixed income investments. Currently serving as the head of micro strategy at Sapient Finserv Private Limited, he brings 2 decades of expertise in fixed income trading, portfolio management, and macroeconomic strategy. Before his current role, he was the head at DSP Mutual Fund, where he played a crucial role in shaping investment strategy for 4 years. His career also includes key roles in rates trading at ICICI Bank as well as fixed income fund management at HSBC Global Asset Management. His expertise spans across interest rate strategies, credit markets, and risk management, making him a respected figure in the financial sector. With a strong foundation in macroeconomic research and investment strategy, Mr. Bhatia continues to contribute to the fixed income landscape with his deep market insights and analytical expertise. We welcome you, sir. Next, we are privileged to host Mr. Kaustubh Sule. Mr. Kaustubh Sule is Senior Fund Manager, Fixed Income at Grow Mutual Fund, with an impressive 19-year journey in investment management and IT. Mr. Kaustubh brings expertise in fixed income strategies spanning money markets, macro, and duration strategies. His career path includes key positions at prestigious institutions like Union Bank of India, Nippon Life, SDFC Life, and Axis AMC, where he successfully managed various fixed income portfolios. An alumnus of Vinod Gupta School of Management, IIT Kharagpur, with an MBA in finance and a computer engineer graduate from PICT Pune University. Mr. Kaustubh combines technical acumen with financial expertise. Today, he leads Grow Mutual Fund's fixed income and precious metal strategies since its inception in May 2023. We welcome you, sir.
Next, we are privileged to host Mr. Naveen Kulkarni. Mr. Kulkarni is a distinguished investment professional with over 2 decades of experience in investment management, equity research, and the telecom industry. Currently serving as the Chief Investment Officer and Executive Vice President at Axis Securities PMS, he leads a broad spectrum of investment mandates, including portfolio management services and investment advisory. Throughout his career, Mr. Kulkarni has played a pivotal role in scaling AUM growth by introducing innovative products and portfolio strategies across diverse investment styles. He has also been at the forefront of launching quantitative artificial intelligence, machine learning, and smart beta strategies, demonstrating a strong track record of success. A widely recognized industry expert, he is frequently cited by leading news broadcasters and print publications. His deep market knowledge and strategic acumen continue to shape the investment landscape, making him a key thought leader in the financial industry. We welcome you, sir. We are honored to host Mr. Vetri Subramaniam. Mr. Vetri Subramaniam is a Chief Investment Officer at UTI Asset Management Company Limited. He joined UTI AMC as Head of Equity in January 2017 and assumed the role of Chief Investment Officer from August 2021. The assets managed by UTI Mutual Fund stand at rupees 3,524 billion, and the total assets under management of UTI AMC are rupees 20,771 billion. At UTI Mutual Fund, Mr. Vetri leads a team of 26 members in equity team and 13 members in the fixed income, including analysts and fund managers. He has led the development and implementation of the firm's investment processes, Score Alpha for equity and GIMS for fixed income. Mr. Vetri has over 30 years of work experience and holds a PG diploma in management from IIM Bangalore. We welcome you, sir. To moderate this session, we have Mr. Akshay Chinchalkar. Mr. Akshay Chinchalkar heads research, content, Corpcom, and business intelligence at Axis Securities. Sir has previously worked with Bloomberg and is a CMT charter holder. We welcome you, sir. Let's dive into this exciting conversation, I would now request Mr. Chinchalkar to begin the discussion.
I'm the lucky guy here. I got introduced twice, but I'm not complaining. Welcome, gentlemen. Thank you for joining me. I think, in the next 1 hour, there'll be such amazing insights that I'm sure our panelists will share with all of you. So make sure you have some real takeaways from this discussion. And on that note, therefore, I want to get started with fixed income as a theme, because that's been a theme for nearly a month now. We got the first policy, cut in 5 years yesterday, and Governor Malhotra seemed to be more confident that future inflation will remain under control. Of course, we'll see how that evolves. But in that backdrop, and sort of my question is to you. I mean, do you see this as the start of a rate cutting cycle? It's going to last a little longer than people think, or do you think it's going to be a one-off? It's going to be fleeting.
Thanks.
And therefore, how much easing do you reckon we should expect in the coming financial year, given everything that's happened?
Thanks, Akshay, and good morning, everyone. First of all, as you mentioned, yes, it's a fixed income theme. Of late, it's nice to have more fixed income and currency people in panelist. Last 3 years, we were cornered by equity people. Well, to talk about a rate cut cycle after starting after 5 years, it's not been a good omen of late having rate cuts. I think you also, in the last conversation, most central banks, be it US, Bank of England, and now in India, whenever they have cut rates, yields have gone other way, the opposite direction. So, one, this reflects that the scope for rates to go down considerably is relatively limited, which we call a shallow interest rate cycle. And second is to consider this as a cycle. It would be a lot more to do a start-stop sort of a phenomena. Most importantly, from a fixed income standpoint, we often say what is the rate outlook. Actually, we segregate that into two parts. The rate outlook is often different from yield outlook. What matters to us is what's happening with the yields, because if governments are borrowing a little expensive, then cost of money for you and me is not going to come down. And hence, from a rate standpoint, it may be lower, but yields, we will not have so much of a respite through the coming months and quarters and years, because US has a lot more to refinance their maturities, what's coming up in the next 6 months, and that will put a lot of pressure on US yields. And as US yields remain under pressure, the INR yields or INR currency will not have so much of a solace. So from a macro perspective, yes, inward-looking India is doing well, but it's sort of getting into a fight, making India versus making America great again. So when these two people meet next week in US, we'll have some more clarity coming through. So not so much to celebrate net on a rate cycle perspective. It may come out as a start-stop rate cycle.
Well, that's interesting, because yesterday I was hearing some chatter about, retail chatter about how, the 10-year is at 6.7, and people are thinking, oh my God, it's going to be so awesome if it falls below 6%, but you don't think that's going to happen.
Well, it's unlikely to happen to that extent, because yesterday, after the 10-year yield was at 6.7, evening US unemployment was at 4.
Yeah.
So if US unemployment stays at a relatively lower levels, then we can't get so bullish for yields to keep falling. And hence, we are in a good sweet spot today, Jan to March, very little government auctions. RBI is buying a lot of bonds. These dual benefit will cease to exist once we cross over into April, because the auctions will start getting a little bit more rapid. And hence, yields may not rejoice as much. So that comfort looks to have a very limited shelf life.
Understood. Kaustubh, I want you to add to that, but I have another question for you. Like I said to Sameer as well, there was some section of the markets that was hoping for a larger cut, right? Because ye dil mange more. But and I think it also came from the fact that the liquidity measures announced by the RBI a couple of weeks ago were so huge, right? To kind of correct the liquidity deficit in the system. So we got 25 basis points. Do you think with all of the information available to the RBI, that was the best thing that they could have done?
Yeah, good morning, everyone. So nice to be here. My view over here is yes, it is a very balanced view because going into the policy, RBI was grappling with three issues. First being lower growth uh, number which printed for the Q2. The second being the currency volatility that we discussed for half an hour. The third being all the food inflation, which is sort of creating some issues for our RBI volatility also. So coming into the policy, these three factors were definitely playing into RBI's mind, and to balance that, to balance sort of support, give some support to growth through cost of money. They decided on a 25 basis points cut, but on the other hand, you have a currency to manage in this global volatile environment. So they sort of held back on liquidity. In fact, that was one of the biggest demands of the market, that structural liquidity shifted in a very volatile manner from 4 lakh crore surplus in the system to almost 1 lakh crore. And remember, it's as we discussed in INR, that it's volatility that plays a very big part in markets and economy rather than the absolute levels. So the rate of change of liquidity from a surplus to negative was huge, and that was the market demand. And why liquidity is so important? Because it works as just like in a machine, uh, runs well because of grease, oil. Liquidity is important in functioning of the economy. It makes transactions smoother. You have no disruptions as well as supply chains are concerned. So liquidity is what generally you see, an easing cycle start with, then rate cut, ample liquidity, then rate cuts. But here, to balance the rupee angle, my sense is that to external angle, the liquidity part did not come through uh, what market was expecting, because they don't want to infuse a lot of liquidity in a sudden manner. Of course, they have said that they will continue with all their tools, OMO, which is basically buying of government securities, and infusing rupee liquidity is one of the tool. And variable rate repo, quarter end problem liquidity issues are there that RBI will smoothen out. Net, my sense over here is that RBI has also taken solace from the fact that global growth ex of US is on a lower side, historically lower side, and that will not impact commodities in a very big manner, which happened traditionally. And that also gave solace to RBI with Brent prices at around $75, and natural gas prices at much lower. So RBI did a very balancing act, depending on various economic as well as market requirements.
Fair enough. My next question, gentlemen, is for Itri sir. So when equity markets, peaked out in late September, the year-to-date FII inflow was about 11.8 billion. We'll round that off to 12. As we speak, we are standing at an outflow of around 9 billion so far. And that means foreign investors have withdrawn over $20 billion from domestic equity markets. If you look at the NSE 500 as a universe, and we have almost 35% of the constituent members trading more than 20% down from their September peaks. So given the kind of sell-off that we've seen, do you think valuations at this point are comforting enough for FIIs to rethink their India strategy? What are your thoughts on that?
Sure. So I think it's just useful to put in context at some level, I think, why, foreign inflows have been very weak over the last 12 to 18 months. And we've also got to be a little bit careful, because I think when you start to treat foreigners as one homogeneous group of investors, that's a big error.
Yeah.
Right? Even when you say foreigners, there are foreign investors of very different investing perspectives, very different investing strategies, and very different time periods that they have in mind when they are investing. You've got the hedge funds, you've got the guys who are doing the beta plays on ETFs, and then you've got people who, and I know many of these fund managers, they're good friends, who built their careers investing 30 years just long-term money in India. So it's a very diverse set of people who make up that money. I think the two issues which have caused foreign money to flow out of India, one, many of them, because they're same vintage like me, have been grappling with the fact that what the hell happened? How did the valuation window, which looked like this, suddenly is being lifted and put in a completely different box altogether? So that's been a big challenge in terms of trying to understand, why is this happened? Is this the right valuation to pay? How should we think about it? Uh, and then there are two other contributory factors that are playing in over here. As I said, foreigners are a very diverse set of individuals. Much above the actual equity manager who's buying stocks in India, typically somewhere above that, there is an asset allocator.
Correct.
They're thinking about bonds, they're thinking about equities, they're thinking about real assets. And I think one of the things which has really changed since 2022 is that bonds have become a valid investment choice for asset allocators. That was not the case for almost 10 to 11 years. Post 2013, we used to talk about trillions of dollars of bonds trading at negative yields, none of which was in the textbooks. Maybe it's in your textbooks. It was not in my textbooks when I was in school or college that bonds could have a negative yield.
Same.
So, exactly. So, bonds have become a valid investment. And just to give you a simple example, I don't know how many of you tracked the news day before yesterday that whatever, now Mr. Musk's company is called X, not Twitter, but I find Twitter easily, so I'll call it Twitter. Uh, the banks which held the bonds placed it with outside set of investors. Do you know what's the yield at which they got placed? Anybody? These are not investment grade bonds for sure. They're junk bonds. They got placed at a yield of 12%. Dollar yield to American investors.
That's unheard of, right?
Unbelievable, right? And you can buy AAA bonds in the US yielding you 6%, right? And here we are asking whether our GSEC can give you 6%. So simple point, I think bonds have actually become a magnet for a lot of capital in the hands of allocators to say, look, after all these years of going down the risk curve, we can start to normalize. Point number two, when you stack up equity markets across the world in terms of valuations, number one is the US, and good old India is number two, right? And it's a career risk for equity fund managers because the US is 55 to 65% of global benchmark, India is 3%. Get it wrong on India, you don't lose your job. Get it wrong on the US, you stand to lose your job. So I think these are two simple reasons why, there's been, it's not just India, the money has flowed out of most EMs, out. And when you think about it, sometimes it's very funny. We all talk about capital inflows into India, other emerging markets. I mean, the market which is sucking capital out of the whole world, literally sucking oxygen out of the whole world, is the US market.
Absolutely.
Number one destination for foreign portfolio investment, number one destination for debt capital inflows, number one market for FDI. And it is literally sucking the oxygen out of the room for everybody else who's there. So it is a little bit of a challenge. Maybe, things will improve. But to finally answer your question, if I look at the benchmark indices, 10, 12% pullback, currency down 3, 4%, our own internal models tell us that the large cap market is actually back in fair value territory.
Understood.
Right? So I think it's a matter of time before at least you see some of the long-term FPI money start to look for opportunities in India again. I think you're back in that territory where in large caps, they would be quite happy to, selectively start dipping in.
Understood. Naveen, I think you have similar thoughts.
Yeah, good morning. So when I look at, let's say, the FI money, right? So there are two things which come to my mind, right? So what do FIs look, right? So one is eventually the return in their own currency, which is very, very critical, right? So that's something, uh, if we see that a dollar appreciating at such a fast clip, so obviously money will be pulled out. And second aspect which comes to my mind is the structure of the FI money, right? Vetri sir pointed out that it's a very wide range of investors who invest in emerging markets. But critically, what has happened over a, let's say, last decade is that the structure has moved towards more of passive hedge funds, which are dominated by a lot of quant strategies, right? And these strategies tend to be very, very objective in nature at times, right? So, and maybe short term also, right? So, from that perspective, uh, the passive money can move very fast, right? So, fund managers will allocate money for long term, but the passive money can move in very fast. And depending on the country's allocation within that investment style, there will be outflows and there will be inflows, right? So, for example, lot of money, if you look at the foreign institutional money, right, is actually emerging market. It's not just India dedicated strategies. And many of the emerging market currencies have depreciated quite a bit. Like the Thai baht depreciated by almost by around 7 to 8% in a period of just around 45 days. So if that's also part of the basket, then the overall basket depreciates very fast. So there is a multitude of things. So one of the factors which I think is going to be very critical is dollar stabilization. Once dollar stabilizes, I think money is going to come back. And typically, if you see foreign institutional investors tend to invest in large caps, quality, and all those things. And as Betri sir was pointing out, and that's in the fair valuation zone right now. So from that perspective, once we see some bit of stability coming on the dollar front, we should start seeing reversal of that money. Maybe 1 month, maybe 2 months. I'm not sure about that, but valuation perspective, I think what FIs tend to buy is in fair value zone. It's only the currency I think which is going to be critical, and the time might come very soon.
I'm going to stick with you, Naveen, but I'm going to take you across the Atlantic to America. Uh, American equity markets have obviously been the big beneficiaries, like Vetrisor said, of downside volatility seen elsewhere, including India. Now, with President Trump getting a second term and reiterating his America First policies again, do you think North America as a region, speaking equities, of course, is at the cusp of a larger outperformance against emerging markets? And I ask this because if they are likely to outperform, some of these EMs more than they already have, depending on foreign investors solely for a recovery might be a tall ask.
Yeah. So, uh, the point that I was trying to also make was if we look at what has also happened in the Indian equity markets over the last 6 months, is that the number of sellers versus the number of buyers has also changed. Eventually, any price of security depends on the demand and supply of that. The suppliers, of course, have had increased, right? So you had big IPOs coming on top of that, foreign institutional investors selling. The only buyer were the domestic institutional investors, and that too lot dominated by the SIP money. So, of course, that money still continues. That's very, very strong. But to some extent, I believe that with the decline in valuations, the supply would also come down from the Indian promoters and other aspects. We need to see how that's going to pan out. But also one set of investors who are the active portfolio managers in the US and other, they might start looking at it, right? So I think the the balance between demand and supply is likely to be better from here on. And then also, if I see that whatever policies that US is going to take, if it's going to be in some degree inflationary in nature, that will mean that dollar may not appreciate consistently over longer term, right? Because mathematically that's just not possible. So it's going to be an interesting scenario how it pans out. Uh, we'll have to wait and watch, but I think at least from the demand versus the supply front for domestic equities, I think we are very, very soon to see a balance coming up.
Understood. Vetri sir, I'll come back to you and get your thoughts on the Magnificent Seven basket in the US. Now, I was doing some data related work, and I realized that since the start of 2023, the S&P 500 has added about 20 trillion in market value, of which 12 trillion has come from the Mag 7. which means the other 493 stocks in the S&P 500 have only contributed the rest, which is about 8 trillion. Now, do you see that as a real concentration risk? Because if AI as a theme starts to unravel, and we saw the volatility that DeepSeek, bought about a couple of weeks ago, do you think there will be knock-on effects on emerging markets like India? Should that happen?
So I think the lesson that we've learned from history is that if there are bouts of volatility in the US market, because it's sort of a nerve center for capital,
Correct.
it tends to radiate outwards.
Yeah.
So you cannot sort of presume that the aftershocks will not reach you. But for the very reasons that you said, I think anything which upsets the apple cart in terms of the AI bandwagon and those magnificent seven, I think in the more sort of medium term would actually stop the US from sucking this, capital out of the rest of the world, the oxygen that I was talking about. So I think to that extent, it would actually help rebalance the share of the US equity market as a share of global equity markets. That number used to be down in the 40s if you go back post GFC, and it's gone up now to 60 plus. So I think there is some scope. I'm not saying it'll go back to 40, but there's some scope for it to just rebalance relative to the rest of the world. And, when you talk about artificial intelligence, there's obviously this promise of everything that it can deliver. But to get to the point where the promise starts to deliver, I was just looking at yesterday's Wall Street Journal because they have this beautiful chart of the amount of capex. Forget the Mag 7, but the big four are doing on a quarterly basis starting 2021 to the latest quarter. And that number has gone from something like $15 billion a quarter for four of them put together to now a run rate of close to 75 to 80 billion dollars of capex a quarter. Now, I know AI is a very fancy thing and servers and NVIDIA and all of that. But look, my experience of looking at companies which do capex is if you're doing capex in the hope that something will pay off in the future, you're in very dangerous territory because you're eating into cash flow. You're putting all that money into capex, and there's only the promise of what could happen somewhere down the road. So, if you ask me, honestly, from a fundamental perspective, you need to be a little bit wary of the US market and that Mag 7. The market is ignoring the fact that they are pumping so much money into capex on what is actually a very uncertain outcome. And the DeepSeek point that you made is actually classic. These guys are saying we'll still keep going. Amazon day before reiterated, no, we'll double down. We'll spend 100 billion. Right? And they've actually got this example of somebody saying I could do this with 6 million. Now they're saying it's not 6, it was 100, but whatever. I think they're actually playing with fire over there, and I think it'll be interesting to watch how this plays out. We'll have to wait for the history books to be written, but this kind of crazy increase in capex almost reminds me of the infrastructure capex build out we saw in India going back to 2005 to 8, and that normally doesn't end very well.
Yeah, I think Masayoshi Son also made a comment saying that he was committing, I think, 500 billion to the Stargate project. Yeah. And for someone to be, beating all of these American benchmarks with $6 million was such a shocker. So, I mean, I think it's just the promise of what is to be rather than, it's going to be interesting, no doubt. I'm going to come back to the bond market now. So like I said with Samir, Saurabh, I mean, in September, when the Fed cut rates for the first time in many, many years, 50 basis points, surprised a lot of people, didn't surprise some. Expectations were that it was the start of a much bigger, rate cutting cycle. Fast forward to today, we're barely thinking two additional cuts, two cuts this year. I mean, would you subscribe to that? And I mean, what does that really mean for the global interest rate outlook? Obviously, America sits at the top of the pecking order. But it seems like from whatever I've been reading, that the policy pivots we've seen some of these central bankers do, they are likely to be more, stopgap, fleeting, rather than a lasting trend.
Yeah, it can't be a lasting trend because our shelf life of a view is up to the next Trump tweet. So, so to that extent, visibility is relatively poor. It's like those winter mornings in Delhi. If you stay where you are, it's an opportunity loss. If you rush through, it's an accident.
Yeah.
So keep taking keep taking smaller steps. Uh, Economies will be largely, divided into two parts, where fiscal and CAD is good, like India, and where fiscal and CAD is pathetic, like US and few other developed economies. I say fiscal and CAD because that's more like English and maths for a school-going kid. If you're doing well in English and maths, you can take care of other subjects. So if we are doing pretty well in fiscal and CAD, last of the elections is over today. We don't have anything to look at on elections for the next few months, quarters. So we can stay off any adventure creativity from a political standpoint. So we can concentrate a lot more on economics. And to that extent, we can we'll be able to withstand some sort of a pain by refraining to push through the growth aspects. Now, extend this into the rate trajectory. As I said, rate outlook is different from yield outlook. Rate outlook will remain relatively benign because the growth outlook in itself is a lot more softer than what we envisaged in September. Uh, I just mentioned earlier, 4% of unemployment doesn't merit rate cuts in US. So the data is showing up that you don't need so many rate cuts for now. On the yields, of course, there are a fair bit of problem because somewhere the investors will get fatigued of the supply which is going to hit world over, and they'll start putting a price to it. So 4.5% on US yields, be it 2-year or the 10-year, typically tends to attract a lot more flows towards it. And it is more like just switching on an exhaust fan in the kitchen. Suddenly everything gets sucked up into one corner. And this every central banker will be aware of. So if somebody puts through, this is what I'm going to do over the next 1 year, 2 years, we know how much to ignore. But we'll have to walk. We'll have to walk a little bit more smaller steps and then grasp the situation easily. Because one thing which is certainly changing from a growth standpoint is look at a bigger picture. World over, including US now and India, of course, governments are saying we don't want to spend anymore. I mean, we are not in that rush to spend. Private capex demonstrates that private sector is not keen to spend. The recent budget left some money in the hands of people. And decide yourself, you want to save or you want to spend. Now, just on that little about money, from a consumer spending, can economy thrive itself? No. Can a private sector put up capex? Answer is no. And hence, what is a rush? So choose wisely for the money what we have at hand. And hence, the government and the private sector, not only in India, but large part of the world, except for these, the max sevens because of the extent of capex what they are putting in, everybody is holding back the dry powder. And when everybody holds back the dry powder, growth cannot come. So rates, which are a determinant of inflation and growth, will stay benign, but yields, which is a determinant of rates, which is a determinant of inflation plus growth plus liquidity, will have a little bit of a challenge. So one complacent thing what we had over the last 3 years or 2 years was currency markets are a lot more flattish no matter what's happening to rates. That complacency is giving away.
Yeah.
Next complacency which could give away is global credit spreads are at the narrowest.
Yeah.
And that should start
Widening.
That should start widening, or that should start awakening up into the next few months and quarters.
I have to say that, 3 days after Trump took oath for a second time, he was being interviewed by a journalist from Fox News, I think. And he'd made a comment a day prior saying that I want global interest rates to be a lot lower. I want oil to be a lot lower. And she was courageous enough to ask, do you think the Fed governor will listen to you? And he said, yeah, last I checked, I was the president. So I think he will. So that's, to your point. Kaustubh, similar thoughts on that or?
I think as far as US rates are concerned, as your question mentioned, that the expectation changed very drastically. Why did it happen? The
Yeah.
first reason for that was that bond markets were usually of the opinion that when the curve inverts, there's a recession, there's a big rate cuts, and it happened 7 out of 8 times in history. Data going back to 1970. But a very interesting thing happened also in US at that point in time is that the US borrowing was majorly through treasury bills, and usually they don't go above 20-30% in a non-recessionary or a non warlike or COVID-like scenario, but they issued a huge amount of treasury bills, which are basically short-term instruments.
Yeah.
So what it did to term premium, which 10-year yields have a demand supply aspect of it, that every commodity has a demand supply aspect of it. So what it did to term premium is that the term premium compressed for 10-year, and 10-year went on a downward path. There are some estimates as to that term premium compressed by almost 50 to 75 basis points. That's an open question. But this borrowing jugglery that US did resulted in expectations building up that there is going to be a recession. And that's why the bond markets got it wrong this time, because from 2020, as Saurabh highlighted, that the borrowings are huge because there's a fiscal dominance across the world. It's not it's not only in India, it's across the world. And since 1980 to 2020, developed markets were very like, you should not do fiscal expansion, you should not spend too much of government money, you should balance your budget. But that thought process changed in 2020, which markets in some way failed to grasp. And on top of that, you had this borrowing jugglery, which gave a false signal for the market. So, and that's why, you saw a sudden changes in volatility of rate expectations for US. Now, my sense going forward over here is that, markets seem to have grasped that aspect, that fiscal dominance will continue, as Saurabh highlighted, that, there will be higher borrowings, fiscal needs to be checked. So market are now much more focused on fiscal, and that's why government policies, and that's where President Trump tweets come into picture, that for interest rate markets, that where will they cut fiscal, or through Department of Government Efficiency, as Mr. Musk has promised, or they will continue their earlier policies itself. So that has become a very lingering question for US markets, as well as the global markets. And my sense over here is that it will be a very nuanced way, and a small steps kind of way, wherein every aspect of government decision will be analyzed. And things are really, Fed is not really a very big driving force now. It was a very big driving force in 2008 crisis, but with governments taking over across the world, less and less power to a Fed, but nevertheless an important driver, but not the only driver. So government fiscal actions will definitely be watched by markets, and you will see a slightly benign rate cut path, rather than the earlier rate cut path of 7 to 8 cuts.
Understood. David, this one's for you. So, equity markets in India finished last year with, I think, 9 straight years of gains, right? We'd obviously love, a tenth. But in order to do so, and, we spoke about how much foreigners have sold. Do you think that just amps up the pressure on domestic investors to kind of fade all of the selling that FIs are doing? So historically, they've obviously been there. They've supported markets, in volatile times such as such as this, but do you think this time around they'll have to do a lot more?
That's a very difficult question in terms of who has to do how much, right? So, but at the end of the day, uh, you look at businesses, you look at their fair valuation, and you look at their cash flows and growth, right? So that's the critical aspect. My sense here is that if I were to look at on a sequential basis, quarter one and quarter two are bad. Quarter three, I think, is slightly better in terms of how the earnings have come out. I would say that more companies have met expectations. I would say that overall this earning season has been decent. Quarter four should be better, and I strongly feel that quarter one of FY26 will be markedly better, and also because of the base effect of quarter one of FY25, right? So once these numbers start looking better, we are likely to see more and more buying of equities to happen, right? So that's the broad expectation that I have. Also, if I were to look at, let's say benchmark Nifty earnings growth, we can expect a 10 to 12% earnings growth happening for next year. Overall, over the last 3 years, let's say from till FY till 2024, Nifty returns over a 3 year CAGR were around 11%. Earnings CAGR were slightly higher, right? So from that perspective also, you can look at valuations to be fair. So my sense is at least the market should return in line with earnings growth. If earnings falter, of course, there is no chance that markets can deliver. But if earnings come through, we are very, very likely to see markets doing better, and we should have a 10th year of positive returns in that sense.
Understood. We'll stick with the stocks, but I'll come over to you, Vetri. So in January, the Nifty ended lower and marked its fourth successive down month. And the last time we had like 4 consecutive down months was 2001, September. So, in your conversations, are you now, getting a sense that mutual fund investors are sort of feeling the jitters? And I ask this because as of December, mutual funds saw inflows for like 46 months straight. So do you think, some of that is changing or is likely to change? Are they feeling nervous with what's happened in the last, 5, 6 months or so?
Sure, that's a good question. And it's a hard one as well, because it's hard to gauge what sentiment is and, how that's going to behave. But actually, I would say, I travel a fair bit across the country, meeting distributors,
Yeah.
you end up meeting clients as well. I think there's a reasonably large number of people who've sort of bought into the fact that you do need some equity allocation for wealth creation, right? So when you talk even about that 40 odd thousand crore number, the SIP pipeline is about 24, 25,000 crores. Can that exhibit some volatility? Forget the gap between 41 and 24, right? That's allocation money. It can certainly move around. I think the SIP money is most probably going to be a lot more stable. But I will also point out, because again, this data is in public domain. Amphi publishes it. You can track the number of SIPs which are getting registered every month. You can also track the number of SIPs which have been cancelled, terminated, or 3 checks consecutively have not cleared for whatever reason.
Understood.
In which case we treat it as terminated. In the last 4 months, the number of terminations is running at almost 80% of the new monthly signups.
80?
80%. And there is some evidence when we go around in anecdotal conversations as well that, some people perhaps have not fully understood what the SIP is, which is a tool for long-term wealth creation. I almost see people who think like you put in 8 installments and, the 10th installment, your money is already up, 20, 30%, but that's not how it works, right? We know that, I've seen SIP, investors who've been negative after 5 years of investing because the market's done nothing. So I think there's a very simplistic thing that perhaps at the margin, few investors have picked up a wrong message. But I don't think that constitutes the majority. So simple answer to your question, I think there can be volatility to the flows. Don't go by the 40. I think the SIP pipeline is something which has better visibility. But even in that number, there will be some volatility, because I don't think everybody has understood what it amounts to be invested in an SIP. So that is something I would be cautious about. And the other uh, point that I would make, more because I saw it in that headline about cautious optimism and animal spirits. And I'm going to say this carefully because you're sitting across here from me. Has anybody in this room seen the movie Khosla Ka Ghosla? Yeah? Okay, I was worried too many young people may not have seen it. But do you remember that in that movie, one of the most popular dialogues, right, when this guy walks into the property, is आप party hai ya broker, right? I just want to say that if you're an investor, the only set of clothing you should always wear is cautious optimism. We'll leave the animal spirits to the brokers, with all due respect. I think it's okay for brokers to do that. But if you're an investor, then the only set of clothing you should be wearing is one of cautious optimism. And the reason I say optimism is that if you're not optimistic, you shouldn't be looking at equity anyway. Right? So you do need those two to go hand in hand. And I think hopefully a lot of the investors who've come in through the SIP route have sort of started to get the point. And we do a lot of education, both as AMFI, as individual mutual funds, talking to people about, volatility in the markets, how to tolerate it. So I'm pretty confident the SIP pipeline will hold up, but doesn't mean hold it to a T, because the data is already telling you
Correct.
that there are a high rate of cancellations. And I also saw this data set that one of the other wealth managers had put out, where they had basically done, at the end of any 12 months of SIP, are you positive or negative on the 12 months that you've put in?
Yeah, it's important to know.
And this is the first time, apparently, going back quite a few years, maybe 5 or 6 years,
In the red.
where the 12 month is actually negative. So if people are going to react to it, we'll see how they react to it. But I wouldn't panic too much about it. And one final point, because not just in this room, but everywhere I go, this same question keeps coming back: flows, 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 demand, supply. Look, I'm not saying demand, supply is unimportant. But one thing I learned very early in my investing career is focus on what you can know.
Yeah.
Don't focus on what lies completely outside your domain and your ability to imagine and forecast. Flows is one of those. So I learned very early in my career, just ignore the nonsense about flows. Good to know, but useless in terms of incorporating it in your analytical framework. In the long term, if you're buying equities, equity returns track earnings growth.
Yeah.
Don't overpay for valuations, right? But it tracks earnings growth. So that is where you need to spend your time and effort. Analysis of flows beyond a point of time is just analysis for the sake of it. It doesn't get you anywhere.
Understood, sir. Great thoughts. I mean, this is my next question is an open question to everyone. And it's about gold and oil prices, right? They're clearly tracing very divergent paths. Gold has been making headlines for the right reasons, a record high almost every day, while oil prices have been heading south. And I think Kaustubh, you mentioned it, close to 70, maybe it was Samir, 70, 75 on Brent. And of course, President Trump has also made his intent very clear. He wants lower oil prices to make America great again and to improve the life of the average American. Uh, do you think there's enough reason fundamentally for this divergence to continue longer than most people think? Go for it, sir.
On oil and gold?
Yeah.
Look, I think on oil, the longer term trajectory is going to be gradually down over a period of time, because even President Trump's drill baby drill, effectively, if you open up more and more areas for drilling, there will eventually be some oil that comes through. But mind you, this is the classic dichotomy of what the politician and government wants and how businessmen interpret it. Drill baby drill is great for consumers, but if I were the CEO of an oil company, I'm going to look at that and say, here is a project where I need to put in billions of dollars.
Correct.
The oil that I sell, which will have to recover the capex, will happen over the next 10 years.
Correct.
The president is saying, drill baby drill. Is this really a good investment that I should be making? So if I was a corporate CEO, I'd say, oh, great, they're allowing me to drill in Alaska. But hey, if I put billions of dollars over there, what the hell happens to that in case, the prices go down? B, I think one of the things that we are underestimating because we've not experienced it in India for many years now. I would say literally in my career for 25 years, policy stability has been there. And policy has largely followed the same trajectory. There have been slight variations up and down, but I can track back all the way from the 91 government to this government. No government has done a dramatic U-turn of policy. This kind of U-turns in policy which you are seeing on things like investment in green energy, you have committed subsidies to people under the Inflation Reduction Act, then a new president comes and says, sorry, I'm halting everything.
Yeah.
This kind of policy uncertainty, I don't think the US has experienced. We have not experienced for many, many years. And I think that puts sand in the wheels of global capitalism.
Yeah.
If I were a global entrepreneur, I'd be sitting back and saying, I'm not taking big chances anymore because God knows what the president will come up with. If I am building a supply chain which goes across multiple geographies with every country starting to, come down on me, I really don't know whether I can run my global supply chain the way I used to. So I actually think this is a very adverse environment for companies to be making large investments. I know we all got very excited when Mr. Trump said taxes, but I think this kind of policy uncertainty will actually halt corporate capex in its tracks pretty soon because no businessman wants to be exposed to this kind of policy risk. So I think even as far as oil is concerned, I don't really see big capex happening beyond a point. And I think you will see oil prices be contained. Doesn't mean it can't spike. It can spike $10 up or down. But from an India perspective, I think we now overplay the importance of oil prices. I mean, our exports of services is now running at $220 billion a year. It more than takes care of our oil imports.
That's correct.
This is a very different India from the India of 1991, where we had to mortgage our gold to be able to pay for oil. So I think, I wouldn't panic so much about oil. It can create volatility, but that's about it. Gold, I think, is now in a different territory. It's gone up too fast for my liking in the last 12 to 18 months. But strategically, what the US has done to Russia, when they cut off the access to Russia for the foreign exchange reserves it has, any president or prime minister of any country around the world that day, if they did not call their central bank chief and say, so far we've been happily parking our money in the US, tomorrow we have a disagreement with the US, what the hell happens to my reserves?
Correct.
And I think, therefore, central banks don't have an alternative to the dollar, but to the extent that they can, I think now gold is a valid national security asset in foreign exchange reserves, and central banks will keep increasing their exposure.
Yeah. Saurabh, I think you have similar thoughts on gold. With what he mentioned, right, that volatility in policy, you think that should feed into why gold will continue to get a bid?
Yeah, effectively, my capital and your capital is competing with the central bank to buy dollars and gold. So, and dollar as well as especially gold is a finite asset. So when you're competing with central bank, might as well you front run him to buy gold. So there's no other leeway. And second problem is, from a policy uncertainty perspective, we have added a few more notches to that. Put it in a different way, we used to hear mythological stories and we used to revere personalities who could change wish list into reality. Often we get into a phase where we are buying out, we are taking control of Suez Canal, we are taking control of Gaza Strip, we are taking control of Canada as a 51st state. I think Greenland is also one. So when you have such aspects coming through, it certainly gives you sleepless nights. And second is suddenly the tariffs as well as the tariffs and taxes or mass scale deportation all looks like a low-hanging fruit. So when you have these sort of hurdles for the growth outlook, you will look back to the gold, which is now almost getting like a parallel universal currency as much as dollar. So for everybody, it's these two things to hop onto, and that's why I think it's rallying so much. So as a corporate, if Mr. Vetri says I'll bring you cautious optimism and give you high single-digit return. And Akshay will say as Axis that I'll bring in animal spirit and give you lowest double-digit return. As a corporate, why should I put money into my own business? I will just run it as BAU and be happy with a low double-digit return. And hence, all this is going to come through the dollar and gold investment. So that will keep on attracting more and more money.
Naveen, you becoming a bigger fan of gold or?
Yeah, so been an equity investor for so long that gold as an asset class has never crossed my mind much, but the recent rally and the kind of allocation that we have started to see towards gold is quite interesting. And as Vetri sir was saying, now gold has become a global viable asset class, right? So even for central bankers, so that's a big trend change. Yesterday there was another news with regards to the Chinese insurance companies, they can allocate to gold. So this is becoming a strong trend. So we can't ignore gold anymore. So from that perspective, I would say that so gold historically we would see that there would be years where it would be flattish for fairly long period, and then there would be 1 year where the returns would be very staggering. And if you missed timing it, you would be sitting on it for fairly long period. I think maybe those days are gone. Maybe we would see a little more linearity in gold returns because globally there is going to be consistent buying of gold. So it's going to be something which I think every investor should have it in their portfolio to some extent. Indians, of course, do have in physical format in large quantities, right? So that's not a worry for most Indian investors. But yeah, it's going to be a thing probably which will have a case that the wealth effect for India goes up, and that could have a positive impact on the overall way that people start thinking about their own money.
Kaustubh, um,
Yeah.
I think we spoke initially and you had similar thoughts to what Naveen said, but you run like a gold ETF. I mean, what are you seeing in terms of flows? Are people getting more excited than ever or?
See, gold is traditionally getting seen as a monetary asset. So it's like, a 2000-year-old saving account, जो 2000 साल से चला आ रहा है वो 2000 साल चल सकता है. So the point over here is that we have seen monetary systems based on gold, not only
Yeah.
in 1000 years earlier, but recent till Bretton Woods, which was a monetary system across the world till 1970s based on gold. So gold will continue to have its allure, just that it needs to be pinned as a monetary commodity and not in the same basket as oil. Oil is more energy, and agriculture drives your growth. So the more food you have, the more energy you have, the more growth you will have, because you have basic resources over there. So you need to put oil or Brent in that basket. And currently, as the esteemed panel mentioned, that there are a lot of geopolitical volatilities, tariffs, a lot of business uncertainties. So that really impacts companies' decision making about growth, and that really gives not a range for oil to trade, or and it differentiates oil from gold. So you have to look at gold from a very monetary kind of an asset which you trust, similar to a currency. To an extent that gold is a sort of currency which is accepted worldwide. You need not have an exchange for that. You need not have to convince someone that you buy this thing. And as everyone highlighted, that apart from Russia, which really felt the sanctions during the war, now China central bank has really amped up its gold buys, and in fact, past 2 3 years we have seen it's more of central banks buying gold rather than the normal investor. And somewhere that says a lot about gold as a monetary asset in your portfolio, and a diversifying asset against monetary risks, geopolitical risks. And Brent should be more your growth outlook, how energy will be used across the world, how what will be the various sources of energy, natural gas, wind energy, nuclear energy, and it has to be put into that context. So that's how I look at oil and gold.
Awesome, guys. I've exhausted my pool of questions, but we'll open this for Q&A now from our wonderful friends here. So feel free, ladies and gentlemen. Yes, we've got a couple of questions on this side, and we've got one here, right there to your left.
Good morning, respected panel. My name is Pranjal. It was discussed earlier that the major economies are now moving away from China, the global supplier. So, and the Indian government now is also focusing more on manufacturing, domestic manufacturing. But do you think major companies, especially in the capital goods sector, are in a position to mitigate the currency volatility and the focus on sustainable practices which are eating away into their profits and keep the investors happy at the same time?
Naveen, you want to take it? Anyone? It's an open question.
Okay, so I think there are two parts to this question. One was with regards to the supply chains moving away from China, right? And the second part was with regards to whether we have the capability to, let's say, manage the currency headwinds, right? So these are the two aspects. So uh, the first part I think is very, very interesting. Moving away from China globally is a very, very difficult challenge. Let's be very, very honest about that. Interestingly, even during the last few years, where the real estate capex for China has come down, but they have invested a lot even then in factories, right? So if you look at what's happening in the chemical space, there is a lot of export of deflation which is happening from China. So from that perspective, China will remain an integral part of global supply chains. Having said that, of course, people will try to reduce their dependency to some extent, but it's difficult to say that whether it's going to go down significantly. However, what's also happening interestingly is that Indian companies themselves are going up the value chain in terms of their own capability, right? So one aspect which is very, very critical is happening, that the whole domestic market in India itself has become very, very large. So it's not necessarily that a company in India has to be completely dependent on exports to be a strong manufacturing company, right? So even the domestic demand for a lot of goods is quite strong. Let's say an auto ancillary company in India can thrive based on domestic demand itself, right? So that's something which is very, very interesting theme, right? The whole domestic market is becoming critical. So from that perspective, the Indian manufacturing theme can do very, very well going ahead also. Second part was with regards to how companies will manage the currency headwinds. I think in the previous discussion, Mr. Lodha did talk about the kind of situation that we are in. While the rupee depreciation has been very fast, but we are nowhere close to the years when we were in 2007 and 8, where a lot of exotic products were sold to a lot of these companies in derivatives and all those things. And when the currency was appreciating at one point in time in 2006 and 7, all these companies were making a lot of money also. And then once we went through the crisis, and there were like many of the companies went bankrupt also because they had taken a lot of exotic products. So we are not in that kind of a zone. So from that perspective, the kind of corporate numbers that we have seen in this quarter, there have been some degree of losses with regards to the forex challenges. But still, I would say that overall companies have managed to weather the headwinds quite well, in my opinion. So I guess if I have answered your question. Yeah.
Hello and good morning to all the panelists and the moderator. This question is I wanted to ask this to Mr. Sule. This question is regarding that we have already talked about how Indian rupee is falling against the dollar, and just assume that it reaches till 90. In that scenario, how would the landscape of our fixed income market change?
If the rupee were to drop to 90,
Yes.
will it change is the question, but anyways.
I think uh, rupee depreciation is an ongoing process in a structural manner because simply we have a higher inflationary environment vis-a-vis dollar. The point over here is that uh, it doesn't create unnecessary volatility during that depreciation process. So that is what we have to look at, because markets or economy works on rate of change. Stability is dependent on rate of change rather than absolute levels. So the path towards 90, if it is gradual, is not accompanied by volatility, I think that gives you a stability kind of scenario and price mechanism for the economy as well as the markets. And that will work out well for fixed income because why I say so is because right now we need internally to some measures to help growth aspect also RBI projection also of next FY for inflation is 4.2. I don't know what they have taken as projection for INR, but my sense over here is even if we get some bit of hit on inflation through let's say a higher inflation, our real rates are quite high, and we have that real rate mechanism which has been discussed actively in RBI since its 2016 flexible inflation targeting framework came into picture, that when growth needs it, sort of we can get down that real rate. So that lever is still there with RBI. You know, we need not have real rate fixed at let's say 1.5-2%. You can get it down. So my sense over here is rupee depreciation, if it is not accompanied by too much volatility that we see in last 3 months, it will be favorable for fixed income because fixed income has been there in rupee depreciation across, you know, our rupee has depreciated. So volatility is what we need to consider rather than absolute levels.
Thank you, sir.
To
Please,
that,
please.
you know, when I started my investing career way back in 1992, of course, that time they just depreciated the rupee and, you know, it was just about starting to have a regular market price, so to speak. But for the first 10 years of my career, we used to basically start financial modeling saying rupee will drop 5% a year. Okay. Now, when I look at the data, looking back over 30 years, the 5-year average, the worst might be different. The 5-year average rolling return, which is the depreciation number for the Indian rupee, is closer to 3.2%. So actually nothing which has happened in this last 1 year, or not even last 1 year, last 4 months has disrupted that pattern.
Yeah.
Because we were unusually stable last year, we are just still following our trend line. So if we keep following our trend line, we would have anyway reached 90, just that it's happening at one stretch slightly faster than the other.
It's happening in
So
a spurt. So
exactly. So don't, overdo that. But I'll also put another hypothesis out here, since it's an educational institution. You can hold me to it 10 years later, but I'll put enough ifs and buts so that I can also back out of the hypothesis. But just look at it. And this is very interesting for people like me who've seen macroeconomics play out over 30 years, right? Now, suddenly, India is not only talking about controlling fiscal deficit, our finance minister, and I was delighted to see that, is saying, let's target debt to GDP. Right? So she's saying, let's get down India's debt to GDP from 58 to 50% by 2031. Right? The states are, of course, still running at about 20%. But we've got a national policy now saying, let's reduce debt to GDP. Then you shift the telescope and look at the US, they are running at 120, and there is no conversation about bringing down debt to GDP.
correct.
So, if these two countries eventually start to follow a trajectory in which we are focused on fiscal prudence, they are not. We are talking about a 4% inflation target. And mind you, our 4% inflation target is based on the measure that we have today. I think there is enough evidence that that measure is not appropriate. It is overstating the impact of food prices, though I won't say that necessarily brings inflation down permanently, but it reduces the spikes in inflation, both to the upside and to the downside. So Jan 2026, you most probably get the new basket for inflation, nothing political about this. We have to keep updating the consumption basket for what people are consuming. The weightage of food comes down in that by anywhere between 8 to 10%. We won't know till they finally give us the new model. I think that actually makes the case for India to get to the 4% inflation number, actually a number that we can get to and aspire for. Then you look at the gap, 4% inflation in India, 2.5 to 2.8%, which is where they are running in the US. The target is 2, but even they're not clear they can get to 2. I would actually submit that inflation differential and fiscal prudence should not cause your currency to depreciate at the 3.5% that is now in my operating model for the last 20 years. But we'll see. And I've put enough ifs and buts there because who knows, we might change trajectory, they might change trajectory, anything can happen.
I want to get Saurabh's thoughts on that to Vetrisor's comment that, we are now starting to focus on debt to GDP as a metric. I mean, is that a step in the right direction?
Well, of course, yes. On a lighter note, first, Mr. Manmohan Singh will be shouting from heavens. 8450 बचाने के लिए 100 billion dollar उड़ा दिया आपने. Well, having managed money for Government of India for 6-7 years, one thing I learned was when political mandates are, government have two avenues to spend: infrastructure and farmer. In a very layman terms, when your political mandates are strong, your budgets will lean a lot more towards infrastructure, barring the last year when you shift towards the farmer. Farmer means Narega, farm loan waiver, subsidy, etc. So the scope of revenue, the scope of expenditure changes, basis that the immunity of the economy changes. As Mr. Vetri mentioned, now we are in this phase of a very strong political mandate, which means my budgets are leaning a lot more in a controlled fashion towards infrastructure, capital expenditure, etc. And hence the immunity of the economy is very, very strong. Obviously, when immunity of economy is strong, which means my fiscal and CAD is strong, which I mentioned earlier, my English and maths are strong. So it's bound to help me score in other subjects as well. So only difference, again, on a lighter note, when we get to 90, we will be talking about 92. So that is only big difference which will come through. But
the forecasting, I think, as a business is never going to die, no matter what we do.
So it is not the depreciation of a currency which creates a problem. It is a pace of depreciation.
Yeah.
And I think we have enough ammunition and tool to ensure that we can control this extent of pace of currency depreciation.
You had everyone answer your questions. You should be happier. Any other questions? Yes, we've got one here.
Yeah. Hello, panel. So I'm Rutvik Shah. I'm an alumni of this institute. I'm currently at DSP Mutual Fund.
Okay.
So I just had a question that in the last couple of years, we have seen passives as a business and as a investment avenue grow rapidly. Do you think that is the right way for the market to move? Or is that making markets a bit inefficient, especially when we talk about factors, as they have taken up a lot of the NFOs in the last 2 years, be it the number of NFOs or be it the collections? I would like to get everyone's opinion on this.
So I think it's part of the process of development of the market, which is you start to see passives come in because some investors have very different objectives. They have very different, sort of institutional frameworks with which they're looking at it. And we have enough evidence from, particularly the US, because honestly, when you compare a lot of the Indian data in terms of equity markets, I find you can't really compare it to too many other geographies. The only one you can compare it to is the US. And the fact of the matter is, as markets get more and more institutionalized, the breadth of coverage keeps going up, and increasingly you're playing a game in which very highly skilled players are playing against each other, right? So I know they're all retiring now, but it's like going back maybe 2 years, and in the finals of Wimbledon, you have Federer, Djokovic, Nadal, and Murray, all 4 brilliant players. Now, who wins on that given day is very, very hard to say. And that's what effectively happens to active fund management at some levels, that you're playing with a very, very competent set of players, and therefore investing is not a zero-sum game in equity, but alpha is a zero-sum game, right? And if alpha is a zero-sum game and somebody is going to be paying a total expense ratio of 1.5 to 2%, that is the cost which you may not be able to recover. So I think there is a mathematical reason for why passive investing exists. People will, start to figure out that this is either or. Or rather, it is not either or, it is and, right? It's a little bit like how I like my nimbu pani. Shakar bhi chahiye, namak bhi chahiye. And I think that is the right way in which investors need to think about passive and active. It is not a or debate. You can use both. And finally, don't lose sight of the fact, because I'm an investment manager. I've always been only in actives as a fund manager. Of course, as CIO now, I have the largest team of people running passives as well. But important to remember that passives solve a problem for the investor, right? Because it's very easy for me to say, hey, look, these are my great fund managers who have so much alpha. investor or the customer faces a selection problem. At the point that they allocate the money ex ante, they don't know who's got the alpha. And I know in my own career, looking at all the careers of friends who've been around me, we've all had periods where we've gone through very difficult periods in terms of alpha. That could be 1 year, it could be 2 years, it could be 3 years, it could be 5 years. Now, as an investor, how do you tolerate that experience? Ki boss, I am paying full fee, lekin alpha nahi mil raha hai. Right? So the way customers start to resolve this in their heads is okay, somebody is willing to give me index return at basis points. That gives me certainty of outcome, which I value. Right? So, and India has a value for money culture. Right? So I think both will coexist, but investors can figure out how to combine active, where you can get the alpha, but the only thing guaranteed is the cost, or you can add some passive into it, where the return you know exactly where it will come and the cost is a very low fixed number, and then it works to the benefit of the investor. So I think, customer is king, let them choose and use it in the way that they wish to. And I'm seeing many advisors as well who've now realized that you need to combine these two to give the customer a good product.
Naveen, you think there's space for both, like Vetri Sir said?
Yeah, clearly, right? So, to some extent, I believe that Indian market is still a very, very active market, primarily because of many aspects with regards to the growth, right? So, India still is growing at a fast clip. So, there are obviously a lot of opportunities that active fund managers can find. On the other hand, we are also seeing the whole fund management industry growing very, very large. So that, as Vetri sir was saying, the alpha game becomes a zero sum game, right? So those are the challenges that we are grappling with. So in that sense, the passive industry is likely to grow. Quant industry is likely to grow. So these are areas which are likely to grow quite fast over the next few years. So overall, the industry itself is growing very fast. But yeah, in that, I would say that passives, quant investing, these are very, very likely to grow slightly faster probably than the industry rate.
Good.
And there is always exceptional in money to be made in active investing. And Vijay Bhai will be talking after this, so he will tell you all about that. But the challenge with that is only a select handful, achieve the kind of success that he has. It's not everybody gets there.
Uh, can I ask a question?
Sure.
So I was reading an interesting article. I think most people here would have read it by Mr. Shankar Sharma, and he had a very interesting view that the growing interest in SIP investments by Indian investors, that is actually allowing the FIIs to exit very easily from the Indian market. And he seemed to say that back in like 10-20 years ago, when domestic investing was not so popular in India, FIS would find it very difficult to exit the market. And today we are giving them an easy exit because of all the SIP investments you have mentioned, right? 40,000, 24,000 crore or whatever. So do you subscribe to that view? What do you think?
This is a very good topic in which you can have a debate on a TV news channel. Okay. I started my career in 1992. For 20 years, we cried saying, look at the US capital market, how strong it is because of the 401k flows, right? What is the 401k flow? It is nothing but what we have done through SIP over here. It's coming through the EPFO route, provident fund money coming in. So for any capital market to develop, you need consistent availability of money coming into the capital markets, because capital market exists not to keep creating multi-baggers and trading options and futures. It exists so that people with savings can hand it over to the entrepreneurs who invest it, and therefore you get to participate in wealth creation. If you don't have the SIP, where will you get the 401k equivalent from? And we all look at the US and say the success of their capital market story, one of the foundations, not the only one, is that 401k pipeline. So this is the equivalent of that. So this is a false equivalence debate, and I don't want to go there.
Yeah, also interestingly, Saura pointed out at the beginning of the discussion that liquidity is an engine which keeps driving, right? And so if there is liquidity and people are able to exit their investments, it's a good positive for the
I
long
agree.
term, right? So that is when the flow and consistent inflow outflow, if it keeps going, it will give options for people to pump in money and also exit and generate growth.
one question
Hello,
from here.
sir.
I
Thank
think,
you for coming here on a Saturday morning.
sure.
So my question to you is, let's assume that you are an FI investor, right? And last 1 year, the Nifty has not delivered double digit, probably around in the range of 8 to 9%. And the dollar was close to 80, 82 last year at this point in time. And if I bought in $1, invested in the Indian markets, today when it's exiting, assuming it's got a 10% return. So the dollar is 88, and today we're trading at 87.2. So technically, the real return for an FII is not much. It's hardly less than 1%. So what is going on in the minds of the FII before coming into the markets again? Like what's bothering him that he actually made no return in the last 1 year?
Open question.
Well, one from a FPI perspective or an Indian investor perspective, uh, when he is coming in, few things what he will consider is, of course, from a return standpoint, what it can generate on respective asset class, which is very relative to what he can earn in other places also. So rather than looking in hindsight what I could have done, every investor, even you as an investor, will eventually build your own framework. Correct. So you will have a relative basis. If I put this money in Brazil, if I put this money in Japan, China, being an FPI, you have a lot more options than what you will have as an Indian investor. Second is, of course, the currency part, which most of them would have gone wrong, onshore, offshore, irrespective. And today, as those return profile are on a relative basis, on a lower side in Indian investments, and that's the reason why the last 3-4 months you've seen a fair amount of flight of capital moving out of the Indian markets for various reasons, which Mr. Vitri also mentioned. And post November or post October rather, the US yields also started going higher. So again, you'll relate it when your predictable asset class is giving you X return, will you keep the same amount of risk capital to equity as an asset class? So it is these 4 or 5 things which will be a part of most frameworks, which will lead to this sort of a decision making.
Just to add to what Saurabh said, I mean, again, foreigners started investing in India in 1993. Do you know what the rupee was then? No, it was about 34. They have been investing in India for 30 years. They have seen the rupee at 30, they have seen it at 40, they have seen it at 50, they have seen it at 60, they have seen it at 70, they are seeing it now at 87, maybe they'll see 90 also. But remember, investment firms have teams, they have collective memory, they have the frameworks that Saurabh talked about. Those frameworks, those thought processes of the firms, not about one individual who started investing 1 year ago. There is a collective memory, experience, and process where they have most probably, like me, figured out that in India we will experience this loss of 3 to 3.5% a year. Now, if you're a fixed income investor, that's a problem. But if you're an equity investor, the firm has a collective experience of having experienced this for 30 years. They're not going to panic. They know that this is the reality, right? So that's the beauty of investment firms, the investment process, the collective experience, and the knowledge of how have we dealt with this in the past. If you're a one-off, you've never done it in the past, yeah, sure, it's like a slap to the face, but not to these firms. They know all about this.
But gentlemen, thank you. Some amazing insights, and I'm sure I say this on behalf of everyone in the room. Beyond awesome. Thank you very much.
We thank our panelists, moderator, for the meaningful insights shared through the course of this engaging discussion. We got to know about safest investment option, which is gold, and systematic investment plans that they are underrated, and more people need to understand that uh, it helps to build your wealth over the period of time. So, thank you so much. This was truly an insightful session. I would like to now call upon our distinguished faculty members to present mementos to our esteemed guests as a token of our appreciation. I would like to call upon Dr. Aparna Bhatt to felicitate Mr. Vetri Subramaniam.
Yes, of course.
Requesting Dr. Swati Godbole ma'am to felicitate Mr. Naveen Kulkarni. Requesting ma'am to please felicitate Mr. Saurabh Bhatia. I request Dr. Ketan Mulchandani to please felicitate Mr. Kaustubh Sule. Requesting Dr. Raghukumari ma'am to please felicitate Mr. Akshay Chinchalkar. Thank you so much, ma'am. As we draw to a close, I would like to call on the stage Professor Raghukumari ma'am to kindly propose the vote of thanks. Thank you so much.
I would like to convey a thank you to all the esteemed panelists. In fact, it was such a great insights from right from currency risk, macroeconomic implications, FPI flows, and as well as Fed impacts. Thanks for all the insights brought into this Investrix forum. We are delighted to have such insights from the insights which are coming from not only the Indian capital markets, but also from across the markets. Thank you very much, sir. We are going to start the next episode soon.
Thank you so much, ma'am. So, moving forward with our discussion, moving forward with this year's theme, which is navigating investment landscape, time for cautious optimism or embracing animal spirits, we would like to call upon Mr. Vijay Kedia and Ms. Shruti Sharma on Srishti Sharma on the dais.
Hi, good afternoon, everyone. My name is Shrishti. I'm the alum of KJ Somaiya, and it's a great honor and it's a great moment for me to like come back to my alma mater. And just like 7 years back, I was just sitting right there waiting for my convocation. So it's a great feeling. And I'm sure that you must be having a lot of questions with respect to markets, how to navigate and what to do, how to identify multi-baggers. And we do have none other than our esteemed guest for today. But I also have a lot of questions because I have coming after 7 years to my college. So the students that we have help me understand कि अभी भी क्या नाइट मेस चल रहा है या आज सैटरडे है क्या आज फिर से छोले भटूरे मिलते हैं और रात में बाहर जाके खाना है और युद्ध की तैयारी कैसी चल रही है बिकॉज आई कैन सी सब अभी फुटबॉल और सब पूरा एंथू था तो सब पार्टिसिपेट कर रहे हो या नहीं चलो ऑल द बेस्ट आप लोग के प्लेसमेंट्स भी शुरू होंगे बट मुझे ये भी बताओ कि कौन कौन ईटी नाउ देखता है ओके आई कैन thank you and I also see Naveen as well as Vetri sir with us. They also keep coming to our channel, so great. पर थोड़ी और मेहनत करनी पड़ेगी but I'm sure कौन कौन आज हमारे guest speaker को जानता है please. So everybody knows Mr. Vijay Kedia, and he really needs no introduction. One of the renowned investors of India, known for identifying multi-baggers and beyond market. He's known to how to enjoy life. So please welcome Mr. Vijay Kedia with a big round of applause on stage.
It is our privilege to welcome a distinguished personality in the world of Indian investing, Mr. Vijay Kedia. A veteran investor, trader, and entrepreneur, Mr. Kedia is the founder of Kedia Securities and is widely respected for his deep market insights and ability to identify high growth opportunities early. With over 3 decades of experience in the stock market, his ability to spot multi-bagger stocks and his unwavering belief in long-term investing have made him a guiding force for investors across the country. Beyond his investment acumen, Mr. Kedia has a unique way of connecting to his investor community through music. He has creatively expressed market insights and sentiments in his songs, adding a melodious touch to financial wisdom. For instance, in his song Sambal Sambal Ke or Aankhon Ko Kholo Bhaiya, he encourages investors to open their eyes and be vigilant in their investments. His journey from humble beginnings to becoming India's most successful investor is truly inspiring. Today, we are honored to have him with us to share his invaluable insights and perhaps, if lucky, even a song too. Please join me in welcoming Mr. Vijay Kedia.
Thank you. These 2 lines of my song actually brought smile on my face.
So we can't let you go without that. I know you have
You
a
can
bad throat.
understand how
No,
I'm
but
going through.
still, I'll help you. I'll help you with that.
संभल के यहाँ पे बोल तू.
But some
So I have a
markets.
bad throat. Sorry. Yeah.
No, no, sir, totally. And we can arrange a hot water as well. But let's start, sir. There are a lot of questions, and I'm sure our audience too has a lot of questions because right sitting right there, we all are very excited about the investment world, about the stock markets. But the stock market looks very glamorous, sir. and you have a journey which is now well known. But let's start with that so our audience also gets benefit out of that. Your journey hasn't been that one smooth ride up ahead. Give us an understanding that you started from a very early stage, how stock market has been, what were the ups and downs, and what stock market means to you right now.
So, okay, thank you very much. Before that, before I forget, I would like to answer the questions which some, I think, girl asked to
Okay.
Vetriji and others about that. Somebody was saying on TV that, oh, kya tha na, kya, FIIs are exiting just because there is a huge amount of SIP coming in. So I want to say something. Nothing against the whoever has said whatever it is. So I'm just, my view is just what kind of capital market do we need or do we want? Do we want such capital market where entry is very easy but exit is tough? So I remember in old Hindi movies that वो gangster होते थे, अजीत जो gangster होता था ऐसा वैसा कोई, और वो जो गैंग में जब शामिल होते थे लोग तो उनको बोलता था बरखुद्दार, हमारे गैंग में आना तुम्हारी मर्जी से है लेकिन बाहर जो आना हमारी मर्जी से है. So one who will leave the gang will be killed, you know. So we don't want that kind of capital market. We want this kind of capital market only where they have invested 800, 900 billion dollar in the capital market. And of course, SIP 25,000 crore SIP, I had said on one TV that 25,000 crore is nothing. Just imagine a $4 trillion capital market and 25,000 crores coming every month is a peanuts, you know, the way as we will progress more and all the corporate governance will be in place. This 25,000 crore, this 25, sorry,
1,000 crores per
1,000 crore, yeah, it can come weekly or it can come daily also. Or suppose, forget about daily, it can come weekly. So it's not a big amount. So of course, for that we need such a capital market where entry and exit is very easy. So yeah, we don't want a closed door kind of capital market. KFIs आ गया और जा नहीं सकता है. So that's good. Now coming to your point, so I started my journey in stock because everybody knows. So I little hesitate to describe. You know, many times I have said that.
Yes.
So I've started my journey in capital market because I was not very educated and I did not have any money. When I was in class 10, my father died and I failed in the class. So the future was very bleak. So that was the time I thought I have to, and we were four of us, four siblings and one mom, so five of us. So and I was the third child, but boy, you know, so fourth one is my younger brother. So I understood that I have to do something in life. So capital market was the only place where I could have done something without knowledge and without education and without capital by playing satta, what we call it, future trading and all. And that time the satta, the settlement used to take 50 days to settle, you know. So I had a leverage of that. The 15 days का है तो मतलब ठीक है. तो I understood जब जिसके पास कुछ खोने के लिए नहीं होता है तो नापने के लिए आसमान होता है सबके पास में. So this is what I had thought कि अभी अपने को इससे नीचे क्या जाने का, अभी क्या यार इससे खराब क्या होने वाला है जहाँ पर हम स्टेज पे जहाँ पे है. So this is how I started my journey in stock market with future trading and all. But finally, after 10 years of struggle, I realized this thing that maybe trading is not going to take me where I want to go. So my ambitions were money. I wanted to become big and fast, you know, so wanted to become a crorepati in that language, what we in Hindi, as we say. So, but in trading, I used to make money and I used to lose money. So in every two, three small trades, I would make money. But in one, that after that, because as I said that I wanted to become big, so in my fourth trade would be very large compared. So whatever money I have made in three trades, I will put on the fourth trade. And again, I will come back to zero. So it was like a snake and a ladder kind of thing for me. कि so many times, कभी 15 में कट गया, कभी 25 पे, कभी 99 पे. Right? So finally, I decided, I realized that after 10 years of all these things, I decided maybe it is not my cup of tea. So whenever so there I switched to what you call investing. And from there, it has been a little easier. God has been kind. And
well, sir, you are one of the crorepati's in India, which is known for identifying multi-baggers, and that's what made him what he's right now. And we are very glad, sir, that you're here with us. And I remember that 3 years back, he was part of Investrix. It was during COVID. We conducted an online session. But, sir, that time, I remember, Nifty was around 16,000 odd levels. Now, when we see that though we are off those highest points, but we are still holding to close to 24,000 odd levels. In the past 3 years, how have you seen the markets changing? If you can give us a sense, because the debate now is that the easy part of the bull market is over. 2025 could be challenging. So give us your thoughts there, that how was the previous 3 years, and going ahead, what you see?
Now, of course, market has dramatically changed. The entire economics of the market has changed only because of the retailers and all. So, and that is why we could see this, red hot bull market, 16,000 to, I don't know where did we go to 30,000, 35. I don't remember
Close to
about
that,
index and all. But just imagine the stocks price. Many stocks have gone up 10 times, 5 times, 20 times, 30 times. There are many stocks, hundreds of stocks. You will see that. So economy has also dramatically changed after this COVID. And this is what happens. I always say that, steeper the fall, greater the rise, and greater the fall, steeper the rise. This is what it happens in the market. So this is what, of course, the turnaround in the economy and participation of the retail investors, and of course, mutual fund also played a very big role. I think that mutual fund corpus is 60 lakh crore, 65 lakh crore Indian mutual fund, something equal to the FII somewhere around. Is equal. So there's a remarkable, you see, revolution has taken place in India. That is why all this. There are many stocks which we used to get at 4, 5, 6, 7 ka PEV ratio. Now it is 50, 60, 70. So this market is not for people like me who are looking for the value and all. So now coming to the second question, of course, this market had become overbought, and for so many, because of maybe the liquidity, and for so many reasons, the market was overbought and overpriced also. I think now this market is correcting. It has corrected also 12, 13% from the peak. I think it may correct 4, 5% further, or maybe there would be some time-wise correction and price-wise correction. But as an investor, let me tell you, Shrishti, I never think about whether it is a bull market, whether it's a bear market, how much stocks are going to fall, how much index is going to fall. Many times I don't remember also that what is the exact number of index, what is the index now. I have to, समझना पड़ेगा कि क्या निफ्टी क्या 25 है कि 26. I don't remember also. So I made a quote that we are neither in a bull market nor in a bear market. We are into stock market. And there's another quote related to this, is that bull market is like sunshine. It is always there somewhere. The people are talking about like a bull market in India was between 2003 and 8. And after that, bull market started from 2014, technically, whatever they call it, bull market. So then what we were doing in between 2008 and 2013 or 2014. So that was not a bear market, or maybe a consolidated market, or maybe a bear market, whatever you call it. But I will tell you, during that period only, between 2008 and 2013, there were 3 shares of mine which went up by 100 times. Between 2008 and 14, they might have gone up 50, 60 times, and balanced by 2015 and 16. So biggest, my smaller, whatever it is, but my biggest percentage of, wealth was made between 2008 and 13, which was termed as a bear market, or not a bull market. So I think, don't think about all these bull market, bear market. Select the individual script, select the individual stock, look at their own bull market, your interest list. Don't invest in their company. Don't expand their capacity looking at your bull market or bear market. They look at the economy, they look at the demand, and they expand. So bull market and bear market, not every time is just because of the slowdown in the economy or upswing in the economy. There are many factors, like liquidity is another factor. Exit of FI is another factor. Tariff is another factor. There's so many other factors which a market, why that market goes up and market comes down. So I personally, I may be wrong. I am an individual investor. I don't manage others' money. I don't advise. I'm not a manager. I'm not a broker. So this is what I'm doing for myself. I don't care about it. Whether, on the contrary, I will tell you, believe me, whenever there is a red hot bull market, I become little cautious. Okay, oh, let me sell something, because this market is really become euphoric. Whenever there's a crisis in the market, my senses starts working, and I become very alert now. Okay, now this is the time. I like that now. This is the time to get into the market. This is a history you will find in stock market. Biggest wealth in this market had been made by people who had invested into a bear market. In bull market, there is a quote of mine, Srishti, that bull market creates stupid investors, and stupid investors create bear market, and bear market creates smart investor, and smart investors create bull market, and bull market again creates stupid investors. So please remember this thing. So don't go about this bull market and bear market. Judge individual company.
Well, certainly that's a great learning for all of us. But so we are addressing a crowd which is very young, which will go into the corporate, start earning, start investing, and we want to learn from you how to identify those multi-baggers. What is that you see, and how to stick with the names? Because see, as an investor, the kind of run that we are seeing, it's easy to catch. Maybe अगर 100 रुपए पे स्टॉक खरीदा है तो 200 300 हो जाएगा. But what makes you stick to a stock which is 100x, which is 200x? We have seen your stories of maybe Atul Auto and the rest, Tejas Networks, and we are aware of that. But what is that conviction that holds you back that no, this stock which I've bought at 40, it will go to 1000 as well?
No, whenever I buy any stock, I do not have that any criteria in my mind, any limitation in my mind. I don't have any price target. I don't have any time target. I don't know when I'm going to sell the shares, at what price I'm going to sell the shares. So there is a quote of mine that chase the story behind the stock, not money on the table. Money will make you rich, but story will make you wealthy. So I am here in this market not just to have my bread and butter, let me tell you. Of course, I started with this, but I am not in this market just to earn my bread and butter. I am here in this market to create wealth for myself. Okay. That is why I am in this market. I want to become a millionaire or billionaire in this market. And the only way I can become a millionaire, a billionaire in this market is when I will keep on playing on the creech. Okay. If I will quit and if I'll go to the pavilion, then for that, I will lose that dream. Okay. The chance of becoming a millionaire or billionaire or whatever it is, that is over. Right? You can make run only when you are playing on the crease. So that does not mean that you will keep on playing the wrong balls, right? Then you may get out also, right? So that you have to be very selective, you know. So this is what that is why I don't have any price target, and that is why I don't invest any now and then. I hardly invest maybe in one story in 1 year, or maybe one story in 2 years. I don't know. So my job is just to buy like a bull, sit like a bear, and watch like an eagle. So buy like a bull, man, suppose if I have 100 rupees to invest, I will identify a story where I am convinced that, okay, this story should play out. I may go wrong also. I deserve to be wrong. So if I am convinced with the story, then maybe I will put 10 rupees out of 100 rupees. Maybe I will put 5 rupees or 10 rupees, a reasonable amount of my fund, whatever. It is not like 1 rupee I will put. If I have 100 rupees to invest, there are 15 stocks in my portfolio. A major holding is into 15 stocks only. So I will invest like a bull, but a reasonable sum compared to my worth. And sit like a bear. Sit like a bear means I have to do nothing. I have just bought the stocks and let the company run. Let the management worry about what is going to happen, what is going to happen about of the economy, what is Trump going to do, what would be the impact of Ukraine and Russia and all. ये सारी चीजें मैं ही अगर ये सब करने वाला हूँ तो फिर कंपनी वाला क्या करेगा कि सारी सारी चिंता मेरे को ही करना है. So I sit like a bear and watch like an eagle. You keep on watching, keep on monitoring your plants, that what is happening in the economy and in the company. So this is what I do, and as I said that I have a I will give you one example. Like suppose you are boarding a train from Churchgate and going to Virar, and suppose the train reaches Bombay Central 5 minutes before. So you will not. Would you get down of the train or what to catch another train? You won't. And suppose if it is 5 minutes late, then also you won't get down of the train and catch another train. So my destination is large, is big enough. So that is why I don't want to sell and buy and sell, and that is why I keep on buying my shares. And as I said, that it does not. There is a quote of mine, Shrishti, that your demat statement belongs to the market. Your bank statement belongs to you. So whatever is my demat statement, it doesn't go into my head. Okay, my worth is 1 crore rupees. I had invested 1 lakh rupees. Now it is 20 lakh rupees. अभी मैं बेच दूंगा तो बाद में करूंगा क्या वो पैसे का? Ultimately, I have to be in the game, as I said. I have to be in the game to make it big. You know, so if I can only make it big when I am invested. So if I have to sell the share, until unless, as I said, the story has changed, then I will not stay in the company. But if story hasn't changed, then I will not exit.
But sir, can you give us some examples that where you spotted, because you have a decade-long experience, where you have spotted or where you have encountered that the story is not going as per your expectation and you booked your loss and move out of it? The reason I'm asking is because in this bull market, wherever we go and invest, and there's more of a hope that we have that आज नहीं तो कल, कल नहीं तो परसों वो बढ़ेगा. पर क्या आप जब ये एनकाउंटर करते हैं कि आपका शेयर परफॉर्म नहीं कर रहा है, वो स्टोरी में थोड़ी गड़बड़ है, तो आप उसको टैकल कैसे करते हैं?
No, that is why, because I have invested, as I said, that there is not only one stock in my portfolio. I am having, say, 15 stocks.
Yeah.
So it is like a bouquet. And there's so many 15 flowers in that bouquet.
Yes.
So not that all the flowers will bloom on the same day. Not that all the flowers will give the same kind of smell also, right?
Yeah.
Not that life of all the flowers are same. All the 15 flowers are different. You know, so I have to take everything along. Some shares will perform, some shares will not perform, some shares will take some time, some shares will underperform. So you have to look at the bouquet, because I'm not God. Nobody is God here, right? So ये तो अभी आपको इसका तो कोई आपको आंसर नहीं मिलता आपको.
Okay.
तो इसी बोलकर उसको अपने ओवरऑल आपको बुके में देखने का, and keep on watching the shares which is not performing. Why it is not performing? Like I will give you one example, as you asked. Like I bought one company at 50 rupees. Name is Weber Global, because it's now we are discussing about the company, not past. We are discussing about the past, just for the reference purpose. Like I bought at 50 rupees. 50 rupees shares did not perform for 3 years, and later on it went up to 1,000 rupees. In 2-3 years, it went up to 1,000 rupees. 1,000 rupees I could have sold, I should have sold, not just because of 20 times return I was making, as I said, that does not lure me. That times return does not lure me as long the story is intact. I don't exit the stock. Why? Now I am realizing, why should I have, because that time it was having a P of 40-50. You know, and I had bought that shares maybe at 2, 3 or 5 का P में ratio. वो 50-60 का P हो गया था after COVID, you know, because everybody was buying from home. And so many other companies were quoting at 100 rupees. The e-commerce company and all those companies were quoting at 100 rupees. So I also got carried away. Story did not change, but the stock had become expensive. Now after that, it fell down to 250 rupees. And in this entire bull market, it did not perform. In last 3 years, the stock did not perform. But I did not exit, because the main story is not over yet. Main story still playing out. So I just missed an opportunity. So that's a part of the game. Not that every time you can hit a century. Sometimes you are out on 20, sometimes you're out on 0. Sometime. So overall, what you're learning from your mistakes, overall, what lesson you learned, which you are not going to repeat again. You see, making mistake in this market is not bad, let me tell you. People who don't make mistake never make a big wealth. You have to make mistakes, you have to learn the mistakes, and you have to learn from from the mistakes. Only thing is this, you should not repeat the mistake. Otherwise, you keep on making mistakes, this mistake, आज ये कल वो परसों ये, हर मिस्टेक आप करो, 50 मिस्टेक करो, कोई दिक्कत का बात नहीं है. But what you learn, that is important, and don't repeat the mistakes.
All right, that's a great learning. But let's take the debate to investing versus trading, because you have burned your hands there. And then now investing is the game where you are in. And हम भी यहाँ पे classes लेते थे. अभी हमारे साथ अपर्णा मैम थी, तो when I was a student, अपर्णा मैम used to take our derivative session, और वो बहुत tough होता था हमारे लिए. But to be frank, जितने भी हमें derivatives use करने हैं, now I get to know that they are used as an instrument of hedge rather than as an instrument of trading. But that's very lucrative, sir. आप 10 रुपए का 20 रुपए, 20 रुपए का 40 रुपए, व्हाट आर योर थॉट्स ऑन दैट? बिकॉज यहाँ पे भी आई बिलीव बहुत सारे लोग उसमें एक्साइटेड होते होंगे वो मूवमेंट्स को देख के, बट हाउ टू स्टे अवेयर एंड कॉशियस विद दैट?
कोई हेजिंग वेजिंग नहीं होता भाई.
ओके.
ये बकवास वर्ड है. आप सर्वे कर लो. ऐसे तो दारू भी ठीक करती है आदमी को. डॉक्टर भी बोलता है रोज अल्कोहल पिया करो 1 पैक. तो इसका मतलब थोड़ी ना कि हम पीने लग जाएंगे. उसका अपना कॉन्सिक्वेंसेस है, उसका अपने साइड इफेक्ट है. ड्रग भी ठीक करती है. ऐसे तो दवाओं में लिखा है ड्रगिस्ट एंड केमिस्ट. ड्रग ही बेच रहा है ना, जो भी ड्रग हमको ठीक करती है. कुछ ना कुछ परसेंटेज ड्रग भी है. ड्रग भी लाइफ के अंदर में अच्छा है. वो कैनेबीज भी अच्छा है. कई जगह तो कैनेबीज वो हो गया, लीगल हो गया, वो भी अच्छा है. तो ये जो आप बात कर रहे हो ना मैडम, ये ट्रेडिंग वेडिंग की, ये कैनेबीज है. तो ये बकवास है, कोई हेजिंग वेजिंग नहीं करता। आप अपनी आत्मा अपने दिल पर हाथ रखकर पूछो, हेजिंग का फॉर्मूला मालूम है? जितने लोग यहाँ पर बैठे हैं, एक आदमी जरा बताइए। ये महानुभाव को छोड़ दो, सामने जो बैठे हैं ये फंड मैनेजर है, इनकी बात नहीं कर रहा हूँ मैं, इंडिविजुअल इन्वेस्टर्स की बात कर रहा हूँ, अपने जैसे लेमैन की बातें कर रहा हूँ। अपने दिल पर हाथ रखकर पूछो, हेजिंग का फॉर्मूला मालूम है क्या भाई तेरे को? कौन सा शेयर्स लिया था, उसके पीछे कौन सा शेयर्स कितना हेजिंग करने का, कितना लॉट में करने का है? तो कोई किसी को कुछ नहीं मालूम है। ठीक है, तो ये सब बकवास है, हेजिंग वेजिंग करना। ये रास्ता आप लोगों ने खोल रखा है लिक्विडिटी के नाम पे, इससे लिक्विडिटी होती है, इससे ये होता है। ये कोई लिक्विडिटी नहीं होती है, इसमें सेबी को पैसा जाता है, इसमें ब्रोकर का पैसा बनता है। तो ब्रोकरों की एक बिल्डिंग, दो बिल्डिंग, चार बिल्डिंग, उनके एम्पायर खड़े हो जाते हैं, हम लोग ठन ठन गोपाल ही रहते हैं, हम लोग खेलने वाले हैं, कोई आने जाने नहीं। इसीलिए मैंने कोट बनाया था, द रोम वॉज नॉट बिल्ट इन ए डे बट हिरोशिमा एंड नागासाकी वेर डिस्ट्रॉयड इन ए डे। So in investing, always remember Rome was not built in a day. It will take you time. It is like a Chinese bamboo tree. For 4 years, you won't find anything on the surface. But in the 5th year, you will find that 50, 60 feet long Chinese bamboo tree is there in 6 months' time, within 6 weeks' time. So, yeah, this is the difference between investing and trading or trading wedding. एक मेरा दूसरा कोट है that if you are smoking है, तो मेरे पास खाली कोट ही कोट है भाई इसके अंदर में। तो और कुछ नहीं है। वो कल मैं टेडेक्स में गया था वहां पे, तो मैं बोला क्या बोलने का मेरे को, तो मैं खाली मैंने 30 कोट ही सुना दिया मेरे को। देयर इज अनदर कोट ऑफ
कोट
माइन।
के अलावा हम गाना भी सुनेंगे।
आज तो मैं शेगल साहब की आवाज में गाना होगा। पुराने केल केल सहगल साहब थे ना, उनकी आवाज में गाऊं। सो देयर इज अ कोट ऑफ माइन दैट if you are smoking you may die in 20 30 years, and if you are trading you may die next day. Please remember. सो डोंट गेट इन टू ट्रेडिंग वेडिंग एंड ऑल। भाई हम लोग पूरी जिंदगी यहाँ पर गुजार दी है, हमको ट्रेडिंग का टीवी नहीं आता है अभी हमको। आप लोग कैसे ट्रेडिंग में सक्सेस हो जाओगे? इम्पॉसिबल है, लिख कर दे सकता हूँ, इम्पॉसिबल है। ठीक है, तो ट्रेडिंग वेडिंग का कोई फ्यूचर नहीं है, कोई इसके अंदर में है नहीं। ये फन है, जैसे डेल्टा कॉप में आप जाते हो, जैसे गोवा में जाकर कसिनो खेल रहे हो, हांगकांग में जाकर कसिनो खेल रहे हो, घर में पत्ता तो घर में पत्ता खेले, जंगली रमी खेल रहे हो अपने मोबाइल पे, ड्रीम 11 खेल रहे हो। ये वो है, ये उन लोगों के लिए है कि जो उन्होंने मेहनत करके पैसे वैसे थोड़े से कमा लिए और जाकर रात को पार्टी में उड़ा दिया। ये उन लोगों के लिए है। तो आप मेहनत करके इन्वेस्टमेंट करके आप बूंद बूंद से घड़ा भर रहे हो, आपका घड़ा भरा बूंद बूंद से, फिर थोड़ा सा आपके अंदर में ज्यादा आ गया कि मैं तो बहुत सियाना हो गया भाई यहाँ पर, अभी अपन से इधर कौन टकराएगा ये, तो आप जाकर थोड़ा सा दारू पी लोगे, आप थोड़ा सा जाकर पैसा अपना बर्बाद कर दोगे। ट्रेडिंग में सक्सेस रेट 1% है। मैं तो बोलता हूँ 1% भी नहीं है, अब सेबी भी बोलती है 90% है। मैं 10 साल से बोल रहा हूँ कि 1% सक्सेस रेट है ट्रेडिंग के अंदर।
ट्रेडिंग के अंदर
सेबी ने ये बोला है कि 90% सक्सेस रेट है।
yes.
आपके 5 पार्टनर है ट्रेडिंग करने के, पहले आपके ब्रोकरेज लगती है, एसटीटी लगता है, स्टैम्प ड्यूटी लगती है, और एक दो सेबी चार्जेस लगते हैं, ये लगते हैं, वो लगते हैं। और जितनी बार आप करते हो उतनी बार ये तो लगते ही आपको। तो 10 में से अगर आपने 10 ट्रांजेक्शन में 4 सही हुए, 4 गलत हुए, तो जो सही हुए लेकिन आपका जो चार्जेस है वो तो आपका कट ही गया उसको। तो ट्रेडिंग के अंदर में आप हिस्ट्री भी देखोगे, शेयर बाजार के अंदर में इतने दिनों की हिस्ट्री है, जो ट्रेडिंग में सक्सेस हुए हैं 50 साल की हिस्ट्री में आप 5 आदमी नहीं बता पाओगे, शायद उनका भी नाम आप नहीं बता पाओगे जिन्होंने ट्रेडिंग में रियली दे हैव मेड वेल्थ। ठीक है, तो इस बोलकर ट्रेडिंग वेडिंग से आपको दूर रखना चाहिए, ना वो आपका निर्माण करेगा ना वो देश का निर्माण करेगा। खाली इन्वेस्टमेंट करना चाहिए और खाली लॉन्ग टर्म इन्वेस्टमेंट करना चाहिए, इसके अलावा कुछ नहीं।
Certainly, sir. But there's another quote of yours which says that if you want to, you have to decide whether you want to milk a bull or you want to milk a cow. जो हमने लास्ट सेशन किया था उसमें एक बार आपने इसको रेफर ज़रूर किया था, बट अगर सर वो विजन रखना है कि हमें एक काव को मिल्क करना है, उसका बेनिफिट जो है हमें सालों साल लेना है, तो एज अ कंपनी जो आप स्टॉक पिकिंग करते हो, व्हाट आर द की 5 थिंग्स दैट यू लुक इन अ कंपनी? मे बी इट्स अ सेक्टोरल ग्रोथ, maybe it's the valuation that you're concerned about, maybe it's a management, a mix of both. Help us understand that how do you go and identify the multi-baggers, which eventually become multi-baggers, but what are the building blocks?
No, the simple formula which I'm applying in which is the next story going to unfold in India. As I had said many times that to become a good investor, you have to be very observant. You know, I had given an example in different way. When you sit in the plane, air hostess comes to you and tells you, sir, there 2 द्वार आपके पीछे हैं, 2 द्वार आपके आगे हैं, और 2 द्वार 4 द्वार बीच में हैं, आपका निकटतम द्वार आपके बाजू में भी हो सकता है. So this is what, ये आपको as an investor, this is my job. Just looking around that what is happening, what is changing, what is happening in India. If आप इस बात को अगर समझ जाओगे कि इंडिया में क्या चेंज हो रहा है, तो आप एक स्टोरी ढूंढ सकते हो आपको. I will give you one example that I had bought one company, one telecom equipment company I had bought, Tejas Network. Okay. So the meaningful stake I bought, that was after the COVID. I bought meaningful stake after the COVID because stock price had fallen 90 times from up. Okay. 400 वाला शेयर 40 रुपया हो
I
गया.
think you bought around 40ish.
तो वहां पर मैंने लिया 40 रुपए. पहले भी मैंने लिया था, स्मॉल क्वांटिटी लिया था, 40 रुपीज. Why did I buy? I will tell you. Because I realized that in 90s, whenever all these telecom company came, there was some around more than 15 companies in telecom service provider, जिसको हम बोलते हैं, more than 15 companies. And if you remember that incoming was also 14, 15 rupees, outgoing was also 14, 15 rupees. This is what happened. That was the beginning of the telecom boom in India. But finally all these company went bankrupt, and by 2014, 15 or 16, only 3 companies left. Only 2 companies left. This was what you call Vodafone and Bharti Airtel. And finally, this Reliance Comca license taken over by Jio, Vio and all, and Jio came. When Jio came, then the entire market changed. Okay. Now the biggest change we could have seen that time, we could have been, because I was watching that change. Like now, earlier, having a phone was like a status symbol. अरे मेरे पास में Ericsson है, मेरे पास Nokia है, ये है BlackBerry है, ये है whatever it is, but like a showpiece की मेरे पास ये phone है. लेकिन by 2000, mainly after Jio 16, 17, 18 के बाद में यह हो गया कि everybody, जितने आदमी उतने phone. This is what had happened, and many people were having 2 phones also. Even my driver also had 2 SIM cards, phone 1, 2 SIM cards. So this is what the change I noticed कि my God, this is what is, you see what, जिसको भी देखो उसके पास में एक phone है. So मेरे को ये रियलाइज हुआ कि ये नया रेवोल्यूशन इंडिया के स्टार्ट में हुआ. तो मैंने उसको ऐसा नाम दिया कि जैसे अर्लियर वी यूज्ड टू टॉक अबाउट रोटी कपड़ा मकान. This is what the Nara we had been lived with, we had lived with. So abhi now, then I realized now roti, kapda, makan or data.
Phone. Okay.
And data. So data had become very important. आप खाना कम खा लोगे, कपड़े कम पहन लोगे, डाइटिंग कर लोगे और उसमें कर लोगे, डेटा में आप कंजूसी नहीं कर सकते हो. Since morning 6 o'clock, the moment you get up, the good night to good morning to good night, आपका वो डेटा चालू रहेगा, फोन चालू आपका रहेगा. So I realized now this is the new thing which is happening in India. This is a new revolution which is happening in India. That is telecom. And before that, mind you, all those companies which I am talking about, जो भी 15-16 companies, they were losing money because government also had restriction. You can't increase the rate, this and that. Jio changed everything. The price also came down. And after 2016-17, वारपू जो भी बोलते हैं, they have started increasing 5 रुपया बढ़ाया, 10 रुपया बढ़ाया, और scale आ गया because everybody had a mobile phone. So that is why I bought this company Tejas Network, which is into telecom equipment manufacturing and all. And it's the only company in India which is into telecom manufacturing. All other companies are from abroad, like Nokia and Ericsson or Siemens and Huawei and all. Huawei was also there in India. But government of India went for Atmanirbhar Bharat or Make in India, although Nara वारा जब आने लग गया, तो मेरे को लगा this company should get some priority over Nokia and over Ericsson or whatever. तो इसके लिए उसको priority मिलेगा. That is why I bought these shares. Luckily, stock went up by 40 times in 3 years' time. That is okay. It's not important that 40 times. The important that I could understand that story, that it is going to play out.
Yes.
It might take some time. And mind you, I will tell you, I bought the stocks in 2020. Now we are in 2025. Till 2024, the company did not make any money. And stock went up 40 times or 30 times.
Because of the story playing.
Because of the story was there, because they got a huge order from BSNL, 6, 7, 8,000 crores. So what is the company which had a market, which had a sales of say 500 crore, 300 crore, and Tata bought that company.
Yes.
In 2023 or 22, TCS bought that company. So there the entire game changed. So this is, you won't get answer to this, that what is going to happen. That is why I said, if you have belief in the story, the telecom story in India going to play out, going to remain there for years to come. And this is the only company, placement of the company was so unique. And government has put Make in India, ये भारत, Huawei was banned from, not only from India, from everywhere in Europe or on every. तो ये equation आपको समझ में आ रहा है कि ये कहानी कुछ बन रही है यहाँ पे. So that is how I bought Tejas Network. Same thing I applied 3 years back. I saw that all these airports have suddenly become full, you know. And airlines का जो तो मेरे को लगा कि airport पे I remember पहले earlier people would go to airport तो औरतें लड़कियां सब पूरा मेकअप वुकअप करके ब्यूटी पार्लर करने के बाद में जाती थी वहां पर कि मेरे को प्लेन में जाने का है समझो ठीक
But
है
now it's become
so
quite a
now
mainstream.
so I realized that when luxury becomes necessity one story is in the making so this is how I realized that once this traveling was a luxury now it has become a necessity now entire भारत गांव से ये से वैसे स्नीकर में चप्पल में सब पहनकर आराम से प्लेन के अंदर में जा रहे हैं इसके अंदर में तो मेरे को लगा कोई स्टोरी चेंज होने वाला है सो आई बॉट वन एयरलाइन स्टॉक 2 years back so this is how I think your observation is very important that which new story is going to come up.
But so what is catching your eye now? We are definitely not looking for stocks and everything, but how do you see India changing? Because अब मैं ही थी यहाँ पे 2-3 साल पहले या 7 साल पहले तो स्विगी जोमेटो जैसी चीज़ हम महीने में एक बार मंगाते थे शायद हम हर दूसरे दिन अब उसको इम्प्लीमेंट करते हैं ईवीज एक दूसरी थीम है जो कि अब धीरे धीरे पैन आउट कर रही है कैपिटल मार्केट्स जैसा कि हम देख रहे हैं कि इतना बूम है बट अब आप इंडिया को चेंज होते हुए कैसे देख रहे हो व्हाट्स योर थॉट्स ऑन दैट
नहीं मेरे को क्या लग रहा है जैसे हमको इंडिया के अंदर में अगर सपोज हम लोग जो भी गवर्नमेंट बात कर रही है $30 ट्रिलियन इकोनॉमी बाय 2047 और 35-40 ट्रिलियन वॉट एवर इट इज आई डोंट नो व्हाट इज गोइंग टू हैपन ये बिना इंफ्रास्ट्रक्चर के तो हो नहीं सकता विदाउट इंफ्रास्ट्रक्चर ठीक है क्योंकि चाइना के अंदर में भी सेम मॉडल ऐसा ही हुआ इंफ्रास्ट्रक्चर के कारण ही वो ये होता है और दूसरा ये होना चाहिए कि गवर्नमेंट का जिधर फोकस होना हमको सिंपल ये देखने का जैसे बजट आया और गवर्नमेंट का फोकस क्या है क्योंकि पॉलिसी डिसाइड तो गवर्नमेंट ही करती है राइट तो गवर्नमेंट का जिधर फोकस होता है इफ यू रिमेंबर लाइक 4-5 years बैक गवर्नमेंट हैड फोकस ऑन इंफ्रास्ट्रक्चर डिफेंस एंड रेलवेज वेलवेज एंड ऑल एंड so you see what happened in defense all the stocks went up 2 times 4 times 5 times 10 times
even 10 yes
इवन इंफ्रास्ट्रक्चर के अंदर में भी यही हुआ डिफेंस में भी यही हुआ गवर्नमेंट फोकस वाज ऑन डिफेंस की मेरे को आत्मनिर्भर भारत यही जो इंडिया में बना रहा है वो मेरे को इंडिया में बनाने का है इंडियन कंपनी को मेरे को वो ग्रो कराने का है तो डिफेंस के अंदर में कैसा तो दिस इज व्हाट आई एम डूइंग आई एम जस्ट फोकसिंग वेयर द गवर्नमेंट इज फोकसिंग यू नो सो एज ईवी एज यू नेम्ड ईवी ऑफ कोर्स ईवी इज द बिग स्टोरी अभी ईवी में कुछ भी नहीं है जस्ट द बिगिनिंग है टिप ऑफ द आइसबर्ग अभी कुछ भी नहीं है इसके अंदर में तो ईवी एक जो होगा ये एक बड़ा रनवे होगा खेलने एक दूसरा आई ऑल्सो फील दैट नाउ गवर्नमेंट फॉर लास्ट टू बजट्स गवर्नमेंट इज फोकसिंग ऑन tourism I always say on various platform that India has everything यार इंडिया के बाद में बीच भी है समंदर भी है पुराने जमींदारी है पुराने पैलेस भी है ग्रीनरी भी है लेकिन इंफ्रास्ट्रक्चर नहीं है वहाँ पर पहुँचने के साधन नहीं है मंदिर एक मंदिर ऐसे ऐसे हैं और वो मंदिर देख के ऐसे लगता है साउथ का मंदिर आप देखो वो लगता है कि कैसे बनाया होगा 150 साल 250 साल पहले कहीं भी आप मंदिर देखो पर क्या नक्काशी किया है कैसे बनाया उसमें क्रेन नहीं थी ये नहीं थी लेकिन ये सब हम लोग को पढ़ाया नहीं गया हम लोग को बताया नहीं गया तो ये डिफरेंट मैटर नाउ गवर्नमेंट आई थिंक इज फोकसिंग ऑन टूरिज्म ऑल्सो on every budget they are coming out with something 3 years back they came out 3 years back that they will open new 100 new airports and all those so ये सब स्टोरी में आपको ढूंढते रहना चाहिए इसी के अंदर में कि इसमें कोई
कहाँ पे उनका फोकस है सो मे बी इंफ्रा ईवी एंड टूरिज्म इज समथिंग ओके बट व्हाट आर योर थॉट्स ऑन द बजट बिकॉज अब बजट में इतना जो बूम मिला है हमें टैक्स को लेकर जो इंसेंटिव्स है कंजम्पशन एज अ थीम बहुत डिस्कस हो रही है दैट this is the next big theme to work on. But given the kind of traditional FMCG players and maybe the QSR players, what are your thoughts on that, sir?
नहीं बजट बहुत अच्छा है कि ये एफएमसीजी तो ऑलरेडी ये सब तो टेम्परेरी है ये सब तो और ये थोड़े दिन चलेंगे बाद में ये सब ऐसे मेरे को उसके अंदर में एक मेरा थोड़ा व्यू कॉन्ट्रेरियन है तो माफ़ करना और बजट का जो हाईलाइट वो यही है कि 12 लाख करोड़ का उन्होंने छूट दे दिया सो आई वॉज विथ निर्मला जी ऑन 3rd February in Delhi.
Yes.
And 4th February also. And I asked her कि मैडम ये 12 लाख का छूट आपने दे दिया, ये बहुत बड़ा बात है. मैं आपको एक बात बोलता हूँ, which I spoke to Nirmala ji also, that international practice is that threshold limit of personal income tax का जो exemption जो limit है, threshold limit है, इंडिया के अंदर में भी 12 लाख हो गया है. ठीक है, जो इंटरनेशनल जो प्रैक्टिस है वो है इट शुड बी इक्वल टू योर पर कैपिटा इनकम ऑफ द कंट्री. सो इंडिया पर कैपिटा इनकम इज $2,500. सो बोलो 2 लाख, सवा 2 लाख रुपए. अब ये रुपी को छोड़ दो, अभी थोड़ा हो गया, समझो 2 सवा 2 लाख रुपए. तो दिस इज द वर्ल्ड वाइड प्रैक्टिस एंड नॉट ओनली 1% इक्वल टू द पर कैपिटा इनकम. इन मेनी कंपनीज इट इज हाफ ऑफ द पर कैपिटा इनकम. तो अगर आपका $2 लाख का इनकम है तो 2 लाख रुपये का इनकम है तो 1 लाख का एग्जम्पशन लिमिट रहता है. कहीं कहीं सवा लाख, कहीं 1.5 लाख, 2 लाख तो हाईएस्ट है. हमारा तो 5-6 लाख था. कितना था? 5-6 लाख था. अभी 12 लाख कर दिया. तो मैंने मैडम को ये पूछा, मैडम ये 12 लाख का आपने लिमिट कर दिया, बहुत बढ़िया बात है, बहुत अच्छा बजट आ गया, थैंक यू वेरी मच. 1 करोड़ आदमी टैक्स नेट के बाहर हो गए एक झटके के अंदर में. ठीक है, इंडिया में टैक्स 3 करोड़ आदमी देते हैं. 3 करोड़ आदमी खाली टैक्स देते हैं, बाकी रिटर्न भरते हैं. 7-8 करोड़ का जो बात कर रहे हैं वो नील रिटर्न भरते हैं. तो मैंने उनको पूछा, मैडम दिस एंटायर जो भी बर्डन है इट इज कमिंग ओनली जस्ट फॉलिंग ऑन द शोल्डर ऑफ 2% ऑफ द पॉपुलेशन. इट्स ए ग्रेट रिस्क. सो दिस इज व्हाट मैडम डिडंट, माने उनको जो भी उन्होंने बोला, विद ड्यू रिस्पेक्ट टू हर, लेकिन मेरे को कुछ समझ में नहीं आया कि इसका एग्जैक्टली उत्तर क्या होना चाहिए. नहीं, अरे भाई वो रिकॉर्डिंग हो रहा है,
वो सोशल मीडिया पे है सर के प्लेटफॉर्म के. इफ यू
नहीं मेरे को, माने उन्होंने अच्छा जवाब दिया, मेरे को नहीं, मैं समझा नहीं क्योंकि मेरे को नॉलेज नहीं है. मैं तो पढ़ा लिखा आप लोग के जैसे हूँ नहीं भाई, MBA भी नहीं हूँ, CA भी नहीं हूँ. तो मेरे को समझ में नहीं आया. तो मेरे को लगा वो शायद ऐसा बोलना चाह रही है कि DTC VTC में कुछ चेंजेज आएगा, उसमें वो कवर करेगी. तो मेरे को लग रहा है कि ये एक बहुत बड़ा रिफॉर्म दिया मैडम ने. थैंक यू, थैंक्स टू हर, कितना बोल्ड रिफॉर्म दिया. लेकिन इसका रिपरकशन क्या होगा ये मेरे को अभी फिलहाल एक्चुअली मेरे को ये मालूम नहीं है कि इसका रिपरकशन क्या होगा. 1 करोड़ आदमी टैक्स नेट से बाहर हो जाएंगे, 2% के ऊपर में सारा का सारा बाहर आएगा. तो आई एम लिटिल वरीड अबाउट दैट. I personally believe, let me give you one example, one data. India needs 1 crore new jobs every year. 1 crore new jobs we need every year. I read somewhere that a company which is an NBFC and having some 5,000 employees and all, and they said that have started using this AI, and every year this we will माने उसका जो भी AI वाई का जो भी उनका वो अपना सिस्टम वो बढ़ाएंगे, and maybe 4 years from now they will keep on growing 20%, but maybe 4 years from now they will require just 300-400 people only of compared to 4,000 what they are having now. So just imagine the job losses which are going to happen because of this chat GPT or because of AI or because all these things. That is also an AI. So I think India requires job creation. More and more people should have income to pay taxes rather than having no income and pay zero taxes.
Understood. Totally take your point. But sir, before we wrap this discussion, we really need to listen 2 lines from you. Because we know so many songs of yours, so many poems of yours. So 2 line अगर आप हमारे audience के लिए गा पाएं
तो मेरा ऐसा है, थोड़ा पैसा जो आना शुरू हो गया, मुझको लगने लगा मैं गुरु हो गया. कॉन्फिडेंस वो आया, बड़ा दाव लगाया, पैसा इतना डुबाया, मज़ा आ गया. मेरे अंकल के ड्राइवर से नॉलेज लिया, न पढ़ाई की ना ही कॉलेज किया, लोगों की सुन लिया, पेनी स्टॉक चुन लिया, पैसा इतना डुबाया, मज़ा आ गया. हुआ घाटा तो मैंने डिसाइड किया, सबसे पहले ट्रेडिंग को गुड बाई किया, पेनी स्टॉक हटाया, म्यूचुअल फंड में लगाया, पैसा इतना कमाया, मजा आ गया.
ग्रेट सर. आज आपसे आज बात करके हमें भी बहुत मजा आ गया. आई कैन सी कि हमारा क्राउड भी बहुत एक्साइटेड है. बट बिफोर वी रैप, वील जस्ट ओपन द स्टेज. इफ समबडी हैज क्वेश्चंस वी कैन definitely take it and wrap it up.
Good afternoon, sir. My name is Murtaza, and I had a question for you. That around in 2017, I had watched your interviews, and at that time you had mentioned that you had invested in Repro India, one of the companies, and from there, approximately 7 years have passed. And it has given almost no returns. So at that time, I had conviction in the business model. I had searched it by myself also, and they were issuing on-demand books at that time. So my question is that if stocks like these are not performing even after so many years, how do you still have conviction to stay invested in them? Like, what is your thought process behind still holding such stocks?
Yeah. So that is why I said that, say I have 15 stocks in my portfolio. Not that all the stocks are going to perform in the same way. Some are going to underperform, some are going to overperform. So to give, satisfaction to my mind, I say that we have to keep look at the bouquet, the overall how you are performing. I will tell you, it is something like, suppose you must be having 10 subjects in your college. I don't know how many subjects you have.
Yes, 10, sir.
तो देखा मेरा सेंस कितना बढ़िया. तो 10 subjects, you are not going to get the same number in all the subjects. In some subjects you might get 80, in some 90s, some 40, some 50, like it varies, right? Same thing is about investing also. Sometimes you miss the opportunity. Sometimes you don't realize that what is the weakness in the company. I will give you, just imagine, Repro was the only company which would produce a book in 4 hours. This is their business. They eliminated the entire inventory system, books inventory system. If you will notice that maybe 10 years before, from now, 10 years before, you would find so many bookshops everywhere, at the airport or in the market and here and there, वो क्रॉसवर्ड वो उस पर क्या क्या दुकानें खुली थी क्या की और ये तो बॉम्बे में, इसके अलावा भी पूरी हिंदुस्तान में आप देखोगे 90% दुकानें बंद हो गई because now people started buying from online, right? And this company was one step further. It was not only selling through online, it did not have any inventory. Like suppose if somebody is ordering a book, कि मेरे को ये किताब मेरे को लेनी है, they will get the order online and they will print the book, print on demand, and 8 घंटे में आपको किताब दे सकते हैं वो लोग. उसका एक्स्ट्रा पैसा लगेगा, अदरवाइज वो 2 दिन में आपको दे देंगे. So just imagine कि अगर ये story, somebody selling me this story 5 years now, कि इंडिया में ऐसा होने वाला है. I was convinced कि ultimately e-commerce is going to prosper. There was no doubt about it. I was also convinced that ultimately demand for book is also not going to come down. जैसे जैसे population बढ़ रही है, youth का जो participation हो रहा है, लोग पढ़ रहे हैं, demand will also be there. I was convinced that there is no alternate to this man. I was also convinced that their inventory खत्म हो जाएगा, तो लोगों का जो return on investment है वो ज़्यादा बढ़ जाएगा, हमको inventory नहीं रखने का, wear and tear नहीं होगा. Everything was there, but somehow they did not click. So I did not get the answer to this, and you rightly said that I also think कि ये क्या हो गया, 7 साल में perform ही नहीं किया. लेकिन as long as story is not over, I think they should come. When they will come, I don't know. So I don't have any answer to this. But I am holding the shares because other shares have performed. तो कभी कभी ऐसा होता है कि लाइफ में कि ये परफॉर्म नहीं करता है. दुकान के अंदर में इतना सामान, सुपर मार्केट में आप जाते हो, सब सामान रोज नहीं बिकता है, राइट? कोई सामान है जो तुरंत बिक रहा है, रोज इतना पीस बिक गया. एक सामान है वो शायद कोई 1 महीने में बिकता है, या कोई 2 महीने में बिकता है, 6 महीने में बिकता है, लेकिन उसको रखना पड़ता है क्योंकि ये मालूम नहीं कब इसका डिमांड आ जाएगा. तो इट इज समथिंग लाइक दैट.
Thank you, sir.
Any other questions? We can see one hand there.
Sir, as you said that you do not believe in 40x, 50x, so how do you decide on exit? And second question is, do you believe in averaging the stock or you invest all the money in one shot?
एग्जिट का पूछ रहा. तो एग्जिट के अंदर में एग्जांपल आई गिवन एट मेनी प्लेसेस that when the focus of the management changes, that is the time one should exit, or the valuation of the company is beyond your mind, that how can this company sell at this valuation, that is also a time to exit. So I'd given one example that I learned this from Vibhishan. So Vibhishan was a investor in Ravan's kingdom, and Ravan was one of the greatest men of that era. You know, he was the greatest tapasvi, greatest Brahman, और greatest रावण के लिए बोलते हैं, राक्षस बाक्षस तो बाद में लगाया. वो पूरा ज्ञाता था, शंकर जी को भी हिला दिया डमरू में, मालूम होगा आपको जो पढ़े होंगे. So he was a stakeholder and in that Sone ki Lanka of AAA management of Ravan. So yeah, it was AAA before that. And I heard somewhere, I read, somebody told me, जब राम जी ने वो लंका पे चढ़ाई करने के लिए रामेश्वरम का वो बनाया, शंकर जी का शिव जी का जो बनाया, तो उसको पूजा के लिए बोलते हैं रावण को ही बुलाया, ऐसा बोलते हैं. आप पूछना अपने पिताजी को. तो
सबसे ज्ञानी ब्राह्मण.
हाँ, ये विश्वनाथ बाबा विश्वनाथ से आई है, तो इसको ज्यादा मालूम होगा इनको. तो और रावण ने उनको आशीर्वाद दिया कि विजयी भव, मेरा नाम लिया कि विजयी भव है रावण ने, क्योंकि वो उस समय एक पंडित का रोल अदा कर रहा था वहां पर. तो दिस इज वो स्टोरी, आई डोंट नो वेदर ट्रू और रॉन्ग, बट फॉरगेट अबाउट. ये तो हमको मालूम है कि उसने कैलाश पर्वत को हिला दिया था. तो जिसमें दम होगा वही कैलाश पर्वत हिलाएगा ना. दारू पी के तो नहीं लाया होगा भैया, अब अपनी तपस्या से ही लाया होगा ना. कैलाश पर्वत को उठाया, वो हिला दिया था तो उसने. तो he was an investor in that Ramanka Lanka, but when he realized that this focus of this man has changed, focus of the management has changed because of Sita, Vita and whatever it is, then he exited the management. And then that is the exit story. The focus of the management changes, जो करते आ रहे हैं, उसके अंदर में अगर आप कहीं changes आ रहा है, तो you should evaluate what is going to happen. And another lesson we learned from him, that he entered into a AAA management, which was in a crisis. तो जब उसने देखा कि राम जी अभी मौका है इनको पटाने का, ये तो है तो राम राजा ही, और अभी ये बेचारे ऐसे ही घूम रहे हैं इनको, तो इस समय दोस्ती हो जाएगी तो मेरे को काम आएगा उन्होंने. तो क्राइसिस के अंदर भी ही एंटर्ड द कंपनी. मैंने AAA मैनेजमेंट वॉज अंडर द क्राइसिस. जैसे मैंने आपको तेजस का बारे में बताया, 400 का शेयर 40 रुपया हो गया था. तो मेरे को लगा कि ऐसा कंपनी AAA कंपनी और क्राइसिस में 40 रुपया हो गया है बिकॉज ऑफ कोविड, बट द स्टोरी हैजन डाइड. तो मैंने उसमें इन्वेस्ट किया, तो उसने वो निकल कर उन्होंने रामचंद्र जी को पकड़ लिया, बाद में लंका का राजा बन गया. तो ये एग्जिट और एंट्री का स्टोरी ऐसा समझना चाहिए थोड़ा थोड़ा.
Averaging, like if you have bought stock at
एवरेजिंग का मैं आपको बताता हूँ. जनरली आई डोंट डू लाइक दैट. इफ आई लाइक द स्टॉक and if I don't buy whatever money I have at that point of time, I will immediately buy the entire quantity. I will immediately invest the entire quantity. I don't wait for this कि थोड़ा भी ले लो, थोड़ा बाद में ले लो, थोड़ा ये ले लो. वो जनरली मैं ऐसा नहीं करता हूँ. उस समय जितना पैसा होता है उस समय वो शेयर्स में डाल देता हूँ. Suppose I had 100 rupees, I have 100 rupees at that point of time. I will put 100 rupees to invest. I will put 100 rupees. Uh, and suppose if I want to buy more, but I don't have liquidity, so I will wait for that liquidity to create. जैसे भी create होगा, I have to sell some shares. So maybe after 15 days, maybe after 1 month, whenever I will sell some shares, I will have, then I can average the company. But initially I don't wait कि ये थोड़ा लेते हैं, थोड़ा रुकते हैं, थोड़ा लेते हैं. वो नहीं है, वैसा नहीं है.
सर माय क्वेश्चन टू यू इज कि आप कंसंट्रेटेड पोर्टफोलियो अप्रोच फॉलो करते हैं या फिर डाइवर्सिफाइड?
नहीं, diversified. As I said that I am holding 15 stocks. Actually, I am holding around 25 shares in my portfolio. But main जो shares है वो 15 companies के अंदर में है. So all those 15 are diversified. Generally, I don't invest in two companies of one sector, of the same sector. Generally, I don't invest. Like suppose if I have invested in an airline company, so I will usually buy one company only. I will not invest in another company in the same sector. I may increase my holding if I like the sector. I will increase number of shares. I will increase my holding, but I won't have two shares. So
Thank
that
you,
my
sir.
focus is there on that company only.
Maybe the last question towards the end, we saw somebody. Okay, that's answered. But with this, sir, would like to wrap this discussion. Thank you so much, Vijay, sir. It
Thank
was
you.
indeed our pleasure to have you.
Thank you, guys.
Really,
Thank you.
really means a lot. Thank you.
Hello. We thank Mr. Vijay Kedia and Ms. Shrishti Sharma for an engaging conversation and thoughts shared through the discussion. The stock market is a place of extreme emotions, booms and busts, excitement and panic. But as Sir said, steeper the rise, steeper the fall, greater the rise, greater the fall, steeper the rise. The key is to embrace volatility and not fear it. Thank you so much, sir. Thank you so much, ma'am. We're truly enlightened by the discussion. As we draw close to end, we would like to present a token of appreciation to our esteemed panelists. I would like to invite Dr. Hitesh Punjabi to felicitate Mr. Vijay Kedia. I would like to request Sir to felicitate Ms. Shrishti Sharma.
Good afternoon, everyone. We started with fireside chat and we ended with fire. Don't you think so? I have no words to say about Sir. I mean, Sir gave so much of inputs to you all today. Forget trading. Most important aspect. But if you look at Sir's points today, I think you'll have to go back and listen to the YouTube live again. There are many points which you'll have to note down for the same. If you notice here, Sir is so humble and a billionaire. If you notice, Sir gave a lot of inputs to you. You will see the reflection of Indian Warren Buffett. Sir is a real Indian Warren Buffett. Those of you who have read the books of Warren Buffett know it well. Sell when everybody is buying, buy when everybody is selling. That is what Sir said. Sir also said, पढ़ाई लिखाई की जरूरत नहीं है, common sense use करो. Sir has used common sense ever to identify the stocks. You should have vision, courage, and most important, patience. That is what Sir has indicated. If you remain patient forever, buy and forget, you will never make a loss. That is what Sir has indicated. But identifying right vision, identifying the right sectors is most important, and having that vision, that will help you to sail through it. So that is the reason, don't think about bull market or bear market. Don't look at your demat account, shares every day. Stop looking at the stock prices. Just buy and have conviction in your justification what you have bought. But do your research first. Without that, don't buy. Sir, I am privileged and thank you for coming down to the institute and campus And I remember a day when I sent you a message to come down to the institute, you immediately said yes. And my whole team, Finstreet team, was very happy. Students were very happy to hear you will be here. But after a few days, we got again like a stock market. We became volatile, and you said that you will be visiting Nagpur, so you will not be able to make it. Then all my students went down, stock market in the lower circuit, in our Finstreet. But yesterday morning, you gave me a surprise, like Trump. You gave me a surprise. What is the plan for tomorrow? I was so happy at that point of time by looking at your message. I immediately messaged the students, and the first person whom I messaged was Srishti. That obviously our alum, as well as we are very happy to have her as an alum, and she's doing phenomenal good job at ET now. And we thought, why not have Srishti again here back and conduct your interview for them. Thank you, sir. Great to have you here, sir. We are privileged to share your knowledge. Please keep coming to the campus and sharing your knowledge with all of us. Thank you, sir. I'd also like to thank our director, sir, without whose support this event would not have been possible. And also our finance colleagues, Dr. Raghu Kumari ma'am, Dr. Rashmi ma'am, and other finance colleagues who have been part of this event, who have been through all throughout the event preparations. Also, I would like to thank our PR team, alumni committee, and special mention of Mr. Rohit and Mr. Arvind, without whose support this event would not have been possible. Also, the one most important point of the thanks will go to Finstreet team. All the Finstreet team, seniors, juniors, have done a great job. And I know I have harassed you a lot, day, night, sending you, asking you to prepare so much of invites, preparation, etc. But finally, you have done through it. The success of this event belongs to you. Thank you.
Thank you so much, sir.
सर ये चल रहा है ना सर ऐसा हुआ था कि आज मेरे को गडकरी जी के साथ मेरा प्रोग्राम था नागपुर के अंदर में तो संजोग से आपके बाद में वो ऑफर आया तो मैंने एक चांस लिया सर आपको मैंने बोला कि अपने मैं नागपुर में हूँ अपने मैं निकल जाता हूँ माफ करना लेकिन जो फैक्ट बात है तो मैं निकल जाता हूँ तो मैं उनको ये बोला मैं पूछ के बताऊंगा मेरा एक प्रोग्राम है मैंने कमिट किया हूँ मैं पूछ के बताता हूँ तो सर आई सेंट ए टेक्स्ट टू यू तो आपने बोला रे मैंने तो ये कर दिया वो कर दिया तो मैंने आपको मना नहीं किया कि मैं नहीं आऊंगा अगर आप व्हाट्सएप पे देखेंगे ना मैंने आपको मना नहीं किया मैंने सस्पेंस पे छोड़ दिया कि सर ये मना कर दे अच्छा अच्छा कोई बात नहीं जाओ कोई बात नहीं आपका ये है तो मैंने उनको मना कर दिया नागपुर में मना किया कि मैं 8 तारीख आज के दिन नहीं आऊंगा ये फैक्ट मैं आपको बताता हूं और आई एम स्वेरिंग टू गॉड कल भी उन्होंने मेरे को बोला कि सर आज कल आ जाओ आप गडकरी जी के साथ उनको 1 to 1 बैठने का थोड़ा मौका मैंने ये मैं बोला नहीं मैं कमिटेड तो मैंने आपको खाली बोल के छोड़ दिया आपका जवाब आया नहीं मैं फिर भी मैं वेट कर रहा था कि कहीं आप वापस मेरे को पूछे कि भाई क्या बात है तू आ रहा नहीं आ रहा जा छोड़ नहीं आ रहा जा हम दूसरे को बुलाते हैं आपका जवाब ही नहीं आया तो बोला न इधर का रहूंगा ना उधर का रहूंगा मैं तो मैं फिर इनको वापस मैसेज डाला कि सर क्या स्टेटस क्या है बोले हम तो वेट कर रहे हैं तो बोला चलो मैं आता हूँ तो इसलिए भी ये बात
We request Team Finstreet to join us on the dais for a group picture. Dear faculty members, please join us for the picture. We are ending the YouTube live session. Thank you so much, everybody, for joining.